High tail firm. Breaking out this resistance. I
Oh,
add a
I
little
just
bit
get.
there. High volume.
Big dump on volume on EXPE to be up.
Sold half of my affirm in here. 74.17. Holding the rest now. Just trailing the 90 MA. Have a 73.50 average.
He should be up through open on it originally.
Affirm down to. I had it down to open already. I'm I'm selling here into the 78, 75.
Yeah, I'm watching it for a 90 MA entry,
I sold
but it
everything into 75s. I'm gonna let it
yeah,
if it pulls back into 73, 50. Well, the 52-week highs, and I'm looking to see a second trade there.
yeah, this volume looks a little chasey to me. I don't like the 90 MA volume to be the highest volume of the day.
The level 2 is about 10.
Ox pulling back to the 9. 30-cent spread.
Yeah.
I took that 90 MA continuation
Which
on
one?
Docs. I don't love it. Docs 9. Sort of 9 in VWAP, but restored kind of sucks.
Yeah, you're risking about 2 points now. Yeah, I'm not liking it. If anything, just size down,
Yeah. The
because this could pull
volume
back into
is
VWAP.
slow.
Risking about 150.
I need to finish my grading systems. Could automatically reduce my size there.
Expedia might turn into a fashionably late.
Interesting. Net is 5-day. Yeah, FRM looks like it's gonna roll over.
I got dogs, Hitchhiker, 76.
Volume is good on the opening range break on Docs.
Amazon about to
Hitchhiker,
market
and
highs.
MSCI.
Yeah, maybe Amazon too.
You think an opening range break?
I'm gonna try some short in Expedia. I'm just gonna above 197s. I'm also looking at Uber. Continuation. Affirm breaking highs. I'm buying some Affirm here. Fuck.
I don't like AFRM at the 9 if anyone's looking at that. It's like a rubber band.
Yeah, I just shorted FRM with small size.
About to do the same.
Oh my gosh, nice.
Kind of a rubber band or Bella Faya.
Yeah, it had, as it was going up, you had volume starting to decrease, and then you had that large, that rubber band with good volume.
I'm not. That's crazy. It worked. Okay, hello's going crazy. Fuck low. Let's take a look at that.
Took that short in affirm.
Taking some off. I took off that short and affirm.
SMCI is moving clean. I'm covering some of my lawn.
Yeah, now I'm covering FRM toward at target view up.
Straight.
That's a clean short.
Yeah, that was a good trade.
I took half of the short there
No
because
way, I
I'm
don't
gap
think
up
so.
into resistance. This might turn into a fashionably, so I'm just gonna hold.
That's so painful.
Yeah, it could result in fashionable late, but I think I'll add there when the setup will be ready. But
Yeah.
the move was so sharp.
I'd rather see it like make a new push up higher like it's doing right now.
Yeah,
Catch a bid and then make a lower high.
and ideally some tight consolidation
Yeah,
around there.
yeah, I agree.
Because this is pre-market highs here, so I'm looking for that level to see.
Yeah, I might do a retest there.
Yeah, that was a clear change. There's buyers down there.
That makes sense too. Docs might go higher. Still holding the 90 MA on the 1 minute.
Took half on Tesla. 380.
Fashionably late. Affirmies.
Nice.
Let's see. $73.80s. We're risking about $1.
Amazon volume.
Yo, be careful, man. There's a buyer.
And we're at 973.
72, 96, and then 73.
Alright, I'll take it, I guess. Oh, you shit at me. I hate you.
Yo, Expedia straight high day.
Enrique, how do you feel about docs? It might lose the 90 MA on the 1, but it looks clean on the 90 MA on the
Yeah,
2.
I don't like it. It's too choppy. I want to see clear action.
I guess what I'm asking is, you think I should exit on this 9 on the loss of the 1 minute, or just hold for the 2?
I will say. I stop out on the break of 75.80s, 83 or 70, 75, 70. If it's trading around there, don't. That's it. It's a different trade now. Because I'm looking at it in the 5. So do you use that in use different time frames? Use the 2, use the 5 to see bigger picture. Because for me, hitchhikers are not working. They just give you one leg, which it gave you already. But if it does break, you just give it to the break of 76. I will say.
I'm looking at the video for a possible hitchhiker there. Also the cues,
Yeah, the market's strong.
meta.
Oh,
I need to break to continue.
What is this?
Alright, affirm now. Fashionably late. It's in play.
Nice, you held.
Yes, sir. Just took some off here into 70s, 72.50s. Every break 50, I'll add some more. Just take it into low day if possible.
You should have just held it, man, if you're gonna hold it, I
I'm
think.
not, man. I'm trying to make money.
oh my gosh.
Yeah, man, semis are looking weak right now.
Be careful with the firm. They'll hold
PLTR volume.
9 moving average only 5 minutes.
My PLTR scanner's going off. Volume.
Oh yeah, I have a buy stop in there. Thanks. Oh, yeah.
Oh, you're
significant volume.
shooting
Yeah.
me.
Lucky stuff.
Gosh.
Yeah.
Not yet.
Queues are breaking down now. Firm might be in play.
Yeah, stuffed.
Full buy or 17, 1780s.
Right now it's also pulling into the 21 EMA. 7260. So if that breaks, you have the below VWAP below 9.5. If it breaks the 21 below 7250, I think that will be all. That will be that's it. Tick is green right now. 255s.
Stocks getting volume.
Are you still short a firm?
Yes, sir. And the 2. As long as it stays below VWAP, I'm holding the short. The Qs are also
Stocks
trading lower.
5-day break. Volume stuff.
There you go.
Exit docs. Damn cues.
You know?
Damn.
Was aggressive, man.
They don't like that Michigan report.
What happened? Do we have some breaking?
If I'm getting volume.
I'm taking it
Firm is
off into
not
this flush.
going down.
Oh my god. Docs is somehow pushing high day right now. So,
Yeah, and on low volume.
yeah. I just got
Did
out
you
of
take
it.
that break?
No, I've been holding this whole time. I just got out of it on that initial pop and fail on Q's failing. Looks like it might stuck in there. Oh, today is a Have a tricky day. Amazon's low day on volume.
No. Fuck.
Shit.
Damn. Oh well.
You alright? That didn't sound good.
Buying into 72s.
Oh my god. Does anyone know why the market's selling?
Yeah, inflation data, Michigan report.
I'm looking at Tesla professional late.
Q's reverted all the way back. SD. So confused. Nvidia's still holding up very well compared to the other stuff.
Yeah, AMD is selling hard.
Go to.
Took off half of my affirm here. 71 break.
Might look at Docu for a or Docs for a fashion week.
Google sharp selling, breaking that earning raise. May set up for a rubber band.
I'm sure on BL
The way that
for BL continue.
the way that everything is turned off, I'm looking at Oklo maybe. Fashionably late. It should break below 55. Let it break first, and then I'll be looking for a pop back into VWAP. Yeah, you don't want to see that in docs. That's it. I think the move is over in docs.
Bro, PLTR just caught a bid.
Google rubber band just triggered.
Yeah, I'm on Google.
Nice. Anyone watching Bill?
Yeah, I'm sure on Bill.
What's your shutting price?
BWAP 64.
Mhm.
Uber's holding up super nicely right now.
I'm looking at Google. I say 9 EMA rejection there. 74.50 stop. I'll take the long over 187.50. Sorry.
Uber trying to break out right now.
PLTR making new highs.
Now also making new highest volume.
Damn, all glitches right off EWAP. Damn.
Looking at the queue, see if we can project the IMA for a continuation.
Took that in Google short there. 187.50s. Q's are rejecting the 9 or 528. If Q's break above 528, that's it for the shorts.
Hmm. Might be a fail breakout. P so bad.
Adding a little piece
Same.
here in a firm short. Under 72s.
NAD just had a huge deep bird from VWAP, now at all-time highs.
Hello
Very
there,
high.
Keys. Nice.
What a move.
Yeah, it's like the market didn't like that Michigan report.
Like a short SMCI.
Bring some of my fashionably late on Tesla. The open.
Google Love Day. Let's see.
Is below from yesterday lows.
On Oclo break 57.
Nickel P.
Q is waiting for a reset. Continuation. Want to see price holding below the adjusted lows. Also QC is losing the IMA in the 4-hour chart. Is this in the IMA?
Oh, fuck. I left Thinkorswim open in my house, bro. Now kick me out from here.
The Qs is making lower lows after 5 days.
Alright, I'm back.
PLTR flashing.
What do I do here?
Users in deny again. Holds above. I am closing the other position. Yep.
Damn. Fucking Uber won't quit. Oh, maybe a second chance on Amazon. This is 230 level. Do I have that marked up? Interesting.
confirm into VWAP.
Nice. Ah. Train.
Okay, Rob and in Google now.
Views are bouncing. My dummy boy took a short in Amazon.
NET, small dog. And
Oh.
Such a weak bit, though. I don't know. Trigon.
There's my case. Most people they survey the ones that have like political biases. Just they feel good about it.
bouncy ball in Google.
You in the kitchen?
Hello there in Google. Nice call, Rick.
Yeah, covering sun on Google.
It took the retracement that we had.
I took the break like once I saw the bouncy ball and we broke the new lows.
Yeah, let's see. Because the market is not following, but it's relatively weaker.
If you see the selling volume on the queues after 10, it's a chain character, right? So it's the volume is way more than what happened in the first 30 minutes. So after 10, I don't take any longs anymore. So I've been only taking shorts.
Okay. Yeah, we have a meeting today, right? It's the monthly review.
Mm-hmm.
What time we have that, Jimmy?
Cartoon posted that on let me see, it's at 11. Just in some minutes. It's on the general channel. So we'll take a break. See
Yeah,
you guys.
fine. See you, Jimmy.
My bid again? Guys, I missed my bid again. Yeah. It's like 37, 50, such a. What's a 51? Oh, it's my favorite. I leave it. Well, I hope it don't get stuck up. Fuck that. Just rather skip it. This is why I don't like. I'd rather speed. Yeah, I might just hit in. It's so gay. Still in it. Trade. Like, I shorted at like 80. Wow. Yeah. Alright, now do that with 100 shares next time. Nice. Hurts really change the stock. But rather you just not hold positions. Yeah. That's my problem too. You've been holding positions pretty well. No, sure. I'll get in. Like, yeah. Get back in. It's extra one. It's not bad.
Yo, is anyone looking at Apple?
Enrique and Alex.
Go.
Go. Oh, I forgot what I was gonna say. I think we're getting pizza today. Like the firm's paying for it.
Oh wait, actually?
I think so.
And the reason why.
Don't hear it from me though. No, just think so. Think.
Just cause.
Emphasize on the think part. All right.
I don't
It's
believe
just
you.
shits and giggles, I guess.
Still trying to go with two bros anyways. Double up.
It's hilarious, dude. All right, dude. If I get stopped out here, I'm
I'm looking at this Amazon short versus 231.
How much you risking on Amazon,
40.
Enrique?
40. I'm risking $40.
I borrow some money then.
Give you $5.
Hold on, I'm in a trade right now. Give me 1 second. I kind of just made everything back. Bro, let's fucking go. Let's go. Yes. Right now, I'm gonna trill my stuff. Break below 57s, please. Question mark. I have no more borders.
Things so slow right now.
I see tick was just at 100. I'm sorry, 800.
Yeah, there's something about tariffs with Trump. Chasing it. Let's go. That's what I get for chasing.
Recording in progress.
Hey guys, gonna start in a little while. Just a little bit of market volatility. All right, so please be patient.
Yes, sir. that firm for at least 1 year.
Yeah, I'll say about 10 months.
And so we both started at essentially the same firm.
Yeah, well, pretty much everyone who dominates this industry, like Trillium and these guys, and all that firm we started at Heartland Daytech is basically to see, because it's a pioneer firm, that where all these people like Bella and Spencer came out of and started their own firms.
Yeah.
So that was kind of the embryo of it all.
Yeah, I mean, the genesis of, so I call us an active trading firm. I call us an active, skilled, bionic, discretionary trading firm that also offers automated trading. We probably 25% of our P&L comes from automated trading, and 75 comes from skilled, active, bionic, discretionary trading, meaning that we're pushing the buttons, we're entering the orders. So we're interpreting all the data that comes in, and we're pushing the buttons. So like, for instance, today we had a big news release that related to inflation. The number was supposed to be 3.3%, and it came in at 4.3%. And the market initially went down pretty heavily. Market doesn't like if inflation is going to go back up. So generally right now, if inflation is going to get worse than expected, what's going to happen to the market? It's going to go down. And if it looks like inflation is getting more tepid, more towards the 2% area, what would happen to the market? Probably would go back up. And so when a news release like that just hit at 10 o'clock, we're sitting at our desks and the number hits. We're expecting 3.3%. It comes in at 4.3%. And I was like, whoa, it's like, that's a really big difference. I mean, like if it was like 3.5%, that would be a pretty big difference. 4.3%, like that's crazy. And so that's the biggest number we've seen in a long time. And so that's a data point that lots of really smart people are looking at to determine if they want to buy or sell US equities. So we're sitting there, and our decision as discretionary active traders is, should we short? What should we short? Should we short the market ETFs? What are some market ETFs? SPY, yeah.
BLO.
Okay.
GLD.
QQQ.
Okay, so gold, it would be the first. It would be if you were an experienced legacy trader like Steve Hahn, you might get into some gold. That's a pretty sophisticated product to be getting into. But what would be like so you're sitting on a trading desk, right? And a bad number hits the tape, and you want to short the market. You decide you want to short the market. Like, what would you short first? So SPY. What's that? Triple Q. That would be the next thing. What else? IWM. Yes. So I think those would be the three. Those would be. I would definitely say SPY and Qs first. IWM brings in a little bit more complexity. Why?
Small caps.
Yes, it tracks. So the small caps tracks what type of business specifically. So SPY is tracking like the overall bigger companies, right? Qs are tracking what? Technology, 100%. Yeah, awesome. And then IWM would track more.
What the rest of the lower 400.
Yeah, like how small businesses doing.
Yeah.
That's like a kind of a gauge for that. So I'd say I'd want to look SPYs, Qs, and then there's something. I think the third thing though that we would look on the desk would be what? And if somebody gets this, I'll be super impressed.
Come on, guys. Impressive. Come on.
ETF or non-ETF?
It's an ETF. It tracks a measurement in the marketplace.
VIX?
Yeah, very good. I'm impressed.
That was a good hint, though.
That's
Give him a big hint.
That's-
When you said measurement in the market,
How
that
did you look at the VIX?
curious.
To see the amount of, well, doesn't the VIX track the puts ratio compared to, or the amount of volatility?
Yeah, but why specifically would you go to the VIX? So you're right, but there's a simpler answer. Because remember, this is happening and we are competing against everybody. So what would you expect to happen if this is a big thing?
I would expect the VIX to spike, to go up.
Yeah.
Because it's the reaction of the people in general. Like it means that they are more afraid. This
Yes,
is the fear and
yes,
greed index.
yes. So yeah, so that's why you would order those in that way. So we just talked about not just what you would do, but how you would really create a process for you to order those thoughts really, really quickly. So you're not necessarily going to gold first. There are much more sophisticated traders that will have gold on their radar. They typically have a different hold time than we do, but we're looking for that instinctual reaction. When that news hits, what's everybody going to be instinctually doing? Potentially, they're going to be selling equities. They're selling equities. We're going to see range expanding. That's going to drive the VIX higher. And the reality is, if none of those things play out, should we be sitting there waiting for them to play out much longer than that? Or is it very quickly going to tell us whether this news catalyst is important or not?
Yeah, so you'll see, we'll look at VIX. So we'll look for some of the ETFs to trade for that. But those would be SPY, Qs, VIX is a really good place to start. That'd be a pretty good decision to think about getting short that. All right. So, and this has just happened at 10 o'clock. You guys came here at 11 o'clock. So, all right. So the number comes out and it's 4.3%. It was expected to be 3.3%. Don't we just short the whole market, order pizzas for you guys and just, go home and maybe cover some stuff on Monday morning? Like, don't we just do that as discretionary traders? No, first of all, maybe there's just something we're missing. Maybe we're just wrong. But the other thing is about this number, and I won't get too insider baseball about this number, but this number was a sentiment number. And although I don't want to, that's just too advanced to you guys, but it's a sentiment number. So this was just a measurement of how people are feeling about inflation. And so as discretionary traders, the first moves are down. We see the market go down. We see SPY go down. We see Qs go down. We see VIX elevate. Also, we're going to check what. So what would be a really good measurement in the bond markets for inflation?
The bonds would go higher. People
100%. So you
secure.
Yeah. You might look at the 10-year. The 10-year spiked up a little bit. They went up.
Yields go down, bond prices go higher. Yeah, that's what
So they went up to about 4.5% ish. So that's like a good thing to check. And then as a discretionary trader, you're sitting there saying, all right, well, this is sentiment. Like, what is this? Who actually gets surveyed? What is this sentiment made out of? Maybe there's some biases in the sentiment. Like maybe people just get this stuff wrong. It's not the same number as a pure data point on inflation. And so you sit there and you say, maybe it'll go down initially, but then maybe people will be like, I'm gonna blow off that number for now. And so you have to sit and wait and you look for an exit. And so there are exit signals based on price that we learn to signal, hey, maybe we should get out of this trade. So we do that. And then, another really interesting thing in the news lately is DeepSeek. Have you guys been following the story on DeepSeek? All right. So it's Friday on our desk. And, we noticed there's a little bit of weakness across the board. And I think almost everybody missed some information that came out about DeepSeek, but over the weekend, it really came out, right? Over the weekend. And so what came out? What happened with DeepSeek? Who's following the story?
It
Yeah.
was cheaper than our chips here.
By a lot. That's the thing. There was only 6 million to
Yeah.
manufacture the model, right? To produce it, they said.
Okay.
So it's very different than NVIDIA and OpenAI. You can see that it's $500 billion they want to spend on Stargate, for example.
Yeah.
And then you see maybe there is no reason to spend so much money on these NVIDIA chips, for example. That's what causes NVIDIA to really fall that hard.
Okay. And so how many of you guys use OpenAI or
Yeah.
what do you guys use?
ChatGPT.
Yeah.
ChatGPT. You use ChatGPT 4?
Writing emails mainly.
Okay.
I know I'm saying.
So you guys, what else do you guys? Is that the common one, ChatGPT?
That'd be the
And so you use it for emails? Really? Okay. What else do you guys use it for?
Like work emails and like not like, you know.
News data search essentially. For me, I prefer rather than Google at certain times. Yeah.
Okay. One of our guys, one of our traders, Ryan Hassan, has been saying that Twitter's AI, Grok, is better for finance than ChatGPT. And I've found that to be true at certain times, particularly for like charts. So if I get an unsatisfying, I use it as a research assistant. I use it all the time. I have a strong relationship with ChatGPT now. It's like my third child. And so, yeah, I'll just ask it a bunch of questions. So check that out. But yeah, so DeepSeek news hits the tape for the most part over the weekend. And as a discretionary trader, some traders can trade the futures on a Sunday night. So the Asian markets will open up on a Sunday night and the futures will trade. And so you can watch what happens there, but for single stocks, you can't trade them until Monday morning. All right. And so what was interesting is we were all doing a bunch of reading about the implications for DeepSeek. There's a lot for us to read. So we get in our email inbox, we get all this research sent to us from really smart people that are analyzing the impact on DeepSeek and giving us ideas for trading on Monday. But I have to say that the consensus after doing all the reading at our firm was what? It's
yes.
Okay. So that would have been, so if it was BS, right? We would have come in on Monday morning and looked for an opportunity to get long, right? I don't think that was the consensus on our desk. What else could we have decided?
It was like a short-term effect. Like it'll like recorrect itself over time.
Okay. Yeah, again, you might, so you're saying it maybe will go down for a little bit, but then it'll, okay. What else do you think people were thinking? What are some other conclusions you might draw?
I think the best option was actually watching from the sidelines and let the wind blow first.
Yeah.
It took a while for people to understand if it's actually reasonable or not.
Okay, so we are active discretionary traders. We are going to trade opportunities that come, we're going to trade news catalysts or we're going to trade technical catalysts. So if there's a big news headline, we're going to want to be involved. If there's a big technical analysis catalyst in a stock. So Steve used to look at Bollinger Bands and look for stocks to be way oversold. That's a way to measure something something oversold or something overbought. So that's a measurement that you might, it's a technical analysis measurement that you, and so he might say, hey, if something gets 3 standard deviations away from normal and my Bollinger Bands are picking up on that, I'm going to short it. And I'm putting words in your mouth. And so you can talk to guys later about that. But there might be a trade that comes from technicals. So if you are us, if you're an active, skilled, discretionary trader, how would you, and you're following markets, what would you think about that news catalyst? Is that kind of something that happens every weekend and is, you know, an ordinary headline? Is on a scale of 1 to 10, is that, you know, we get it, that's a 3, we get it every weekend. It's a, well, how would you judge it? 10.
Yeah.
Yes, yeah, we're involved. We're trading this damn thing. We're trading. And so now we got to figure out what we want to trade. What do you think we want to trade? What do you think we want to look at?
Nvidia stock probably. Semiconductors in general.
So 100% NVIDIA. And why do we want to trade NVIDIA?
Taking a hit on chips because their chips were cheaper. They made it for cheaper, so they say.
Okay. So what sectors have been doing really well lately? What have been the best performing sectors in 2024?
Semiconductors.
No, actually.
No, not really. Yeah.
The big tech in general. The next
I think what we say, AI and AI tech. Yeah, those have been pretty strong sectors. Growth sectors. They're priced to perfection. People are assuming that these industries are going to grow. And what's been, you know, one of the top performers in those sectors? NVIDIA, right? Okay. So that, and they're sort of the big infrastructure for all of this, right? They're building the chips that everybody needs. So this is, we call this like the head of the snake. Like this is the leader. This is the BMOC. This is certainly the first place to go to. But you can trade other things too. What else do you think you could trade?
Broadcom.
Yeah, you could trade. Maybe you don't want to trade the head of the snake. Maybe you want to trade something that's a little bit easier to trade. Maybe you want to trade a secondary, a sympathy stock. So you might look at a Broadcom or an AMD, and you want to go take a look at stocks like NVIDIA, and track those. Yeah. Okay. What else?
Data centers. Oklahoma.
Jeff, what were you trading? What ETF were you? So you might want to trade an ETF, a trap. What were you trading? So you were trading one of the ETFs? SMH. SMH.
Yeah, same thing.
Yeah. SMH is.
There's also one thing that, as intraday skilled, active, discretionary traders, a lot of what we do is try and put pieces together quickly. And so this is a complex puzzle we're talking. But our job is to put together pieces quickly. So what's a theme that we kind of alluded to already that's been happening? And somebody mentioned big tech. What has big tech been doing with regard to AI?
Spending a lot of money.
Spending a ridiculous amount of money.
Right.
If all of a sudden they don't have to spend as much money, is their profitability likely to go down? If they don't have to spend as much money because this technology is available cheaper, are they still going to be able to use the technology to achieve their results?
Yes.
Yes, they should be able to use the technology. So that was another trade that we were looking at, was some of these companies are talking about spending $100 billion a year. And we were just told that theoretically, they might be able to spend 10% of that, maybe. Is there, you know, rather than that, they've spent it. If they don't have to continue spending it, what should that do to the potential profitability? It should go up a lot, right? So there was a trade in Meta. That was a really good trade on that day because Meta had gapped down with everything else. But it's like, wait, Meta's one of the top 3 spenders. If they don't have to spend all this money, they're still going to be using the technology and it's going to get way more efficient for them to run their company. So that's another trade that was sort of happening. So that's a lot of what we do on a daily basis, is kind of take all the puzzle pieces and think, okay, what's the cleanest, fastest, easiest solution? Thank you very much. And that's how we come up with these trade ideas. Now,
so you think like 2 or 3 derivatives down? That's basically what
we try and start with the first one.
Yeah.
The first one probably has the biggest participation. You know, the broadest idea probably has the biggest participation. But I think why a lot of us are traders and the people in the Zoom call are new developing traders, and we're kind of hijacking their monthly review. But I think it's a good thing for them to hear this too, because as traders, a lot of us aren't trading futures. We will trade futures sometimes, but a lot of us are trading individual equities, right? So we're trading companies. And what we're really trading is the evolving story of what's happening with those companies. And then the way other investors will position themselves based on that story evolving. We just have this beautiful speed advantage. If we sit and wait to see how the wind blows, I'm just kind of using you for example here, not picking on you, we've lost our edge entirely. Because we don't need to be better analysts than other people. We get the research notes and we can read it and put it together. Where we have to be very good is in putting together puzzle pieces, understanding where the money is likely to potentially flow, being there as quickly as possible, and then managing our risk effectively, allocating and managing our risk effectively through the trade.
And I'll say, so we have traders here who are really elite, active, discretionary traders. We, and I throw out numbers to get you to stay interested. That's the way.
You don't have to throw out the numbers.
But there are traders here who have made, close to $20 million in a year trading. There are many traders here who have made over 8 figures in a year. Lots of 7-figure a year traders, and have done that in multiple years. And what's interesting is Steve knows some of those traders, and knows some of those traders when I'm not even sure if they were making $1 million in a year.
No, they weren't.
And so
they were. I could tell they had potential.
Yeah,
you could tell they had this enthusiasm, and they lived, breathed, ate it. But they were, for the most part, consistently profitable. And that's where you start with, being consistent and profitable, because that means they're right more times than they're wrong. Or they don't lose much when they're wrong and make more when they're right. Either or, it's the same thing. And I could tell they had the makings for it. It was like me when I traded with Mike. I mean, my breakout stock was Qualcomm. I was a profitable trader, but Qualcomm back in the day was the crazy one, was the bucking Bronco. Remember when Payne Weber put that $1,000 price target on that thing? So that was when I started trading that, my good decisions got accentuated. My bad decisions got accentuated too, but I knew from my past history, I made more good decisions than bad decisions. So it turned out to a much bigger P&L for me. And I assume that's what they do. They just, once they know they could handle, they could handle the little go-kart, then they go to a little faster race car, then a faster race car, and a faster race car. And now they're driving Formula One now.
Yeah. That's and you'll see somebody like Max Gannick in the office today, who's in his 20s, and he's a mid 7-figure a year trader, made over $1 million in December for the month, made almost $500,000 last month, and was like calling that a bad month or a regular month. Very consistent trader.
Baseline.
Very, very consistent. Making money every month. And so, yeah, I love what you said about you want to be consistent.
Consistent is the key.
And from consistent, you can really become big.
The biggest attribute is with those guys, they're mentally very balanced. And when a trader goes on tilt, we know what we call traders that go on tilt. Like back in the day, it was like, remember Pat Shea, who threw his monitor and stuff, those guys? Everyone's always at the edge, but how you could dance on that edge without falling over, that's the key. And so showing consistency is a very great indicator. It's not a perfect indicator that you're mentally well balanced. And that's very important.
So when I started before you did.
Yeah.
But when I started, things were less professional. We traded on this one monitor, and the computers are put on these folding tables that you would see at a picnic, a family picnic. You know those folding tables you take out from your basement and you put it out in your yard and you have a picnic? We traded on those. But it was to your point about being on tilt, and to my point about being unprofessional. We actually had a system at the firm where you could break your keyboard. The tech guy would give you a new one and they would just bill you as if this was just a regular thing that somebody was breaking their keyboard into pieces that they needed a new one. So we don't do that here today, but that's a funny anecdote from back in the day. But I wanna close the circle about DeepSeek and say, look, we get all this research. We've got guys who are just best in class in our space. And the consensus coming in on Monday was, we don't really know. We don't really know. We don't know if this is all BS, to your point. And we don't know, there were some notes put out that this is from China and China makes things up. And this is made up, that no, they didn't actually do this for $5-6 million. And no, the models aren't as good. They use the best NVIDIA chips and they're lying that they didn't. And they spent $100 million and they're lying that they spent $6 million. And so, there was that aspect of it that we didn't know. And we weren't sure whether or not this was going to cause more CapEx spending by big companies or less. Maybe this model is better, but then maybe there's going to be an arms race where people are going to try and get better than that. And we didn't know. And you might think there, and I think this is a good point, you might sit there and be like, how do these guys not know? They're professionals. Isn't that what they're paid to know? No, we're not paid to know that. There was going to be a big direction. It was either going to bounce a lot or go down a lot. And there were going to be big trading opportunities. And, as a trader, as a discretionary trader, if you spot a big opportunity, it's okay to say, I don't know. And in fact, really good trading is being open-minded and watching the order flow. Just watch how the big money decides on this particular news. Just watch them. And then after you watch them, you'll see a direction start to form in the marketplace. And think about it. If you have big institutional money and a trend starts to form in the first hour of trading, or now we're an hour in and you start to see NVIDIA's weak. And you've got trillions and trillions of dollars in the marketplace that have to be put to work. Do you think that they're going to be done with their trading in an hour? You think like that? Everyone did trillions of dollars of trading in 1 hour. No, these people have massive amounts of money that they need to put to work, and they need to put it across lots of different products, US markets, foreign markets, bonds. And you don't have to be first in and you don't have to know, you can just observe and pick your spots. And so the best trading is doing that. I think we should give them a little bit of hot food and then come back.
Yep, let's do that. There's pizza in the kitchen if you guys want to come.
Why don't you guys get some pizza and bring it in here? Or you want to?
We'll do it in here. That's great.
Yeah, get some pizza and bring it in here.
There's pizza and salad and breadsticks and stuff like that. I don't think these guys eat salad. I'm just joking.
Yeah. When are you doing it? 17. Okay, it's okay. About a couple of years after. Yeah. I've heard a lot of stories about you.
Oh, good.
And what we talk about the stubbornness, though.
Forrest had really good
personally,
to say about
personally, I was wrong for 2 years straight. I just was too stubborn I was so convinced the market was going to bank, and that got into my head.
What years was that?
Well, when the bull market really got started, 2014 to 2017, when
Oh,
the market
gotcha.
went straight up.
Yeah.
I was short.
Well, that was after the 08 crisis and everybody was
Yeah,
expecting.
I was short all the way through that one. Oh, jeez. I was short huge all the way through. But as they will attest, I did not lose money.
That's good.
I actually made some money, but that's only because, skill wise, I'm a good trader.
Yeah.
But the thing is, when we talk about open-mindedness, that's the key, big key.
Yeah.
The market's right.
Yeah.
The market's right. And first one to admit the market's right. And then you admit that you're wrong. The quickest to admit that you're wrong, those are the best traders, actually, from my experience. The quickest to admit that they're wrong.
Yeah.
Before the market really tells them they're wrong. Those are the really good traders. Because I worked in Hong Kong as an investment banker, so I dealt with portfolio managers from Oxif and Highbridge Capital. These guys who basically trade.
Yeah.
And Rob Tsai, he was the Merrill Lynch prop guy. Man, if this guy, if the stock did not move exactly the way he thought he'd move, he just cut it.
He was out.
He was out.
Very
He was
disciplined.
out. He was so disciplined,
Yeah.
extremely disciplined. He made a shit ton of money from from Merrill Lynch. This is the Merrill Lynch before they merged. So, yeah, I learned a lot from those guys, and I didn't take that advice to heart. But it's exciting. It's exciting for these guys. I think a couple of these guys have some real serious potential.
That's
I mean,
good.
just they're in the chats, always talking about price movements, charts. They get together Sunday night at 10 o'clock and talk through the week about the trading themes.
Nice.
I don't join them 10
Yeah,
p.m.
yeah,
Sunday
yeah,
night,
yeah.
but they do on their own. So, and they're all 4.0 students. They're in community college for money reasons, or Yossi just moved here from Israel. Those types of reasons, and really, yeah. I mean, that's one thing that taught me about teaching here is, you get a large swath of students from all different walks of life, but the best students from WCC, I'll put them with anyone from, my son went to Columbia College, and my daughter is graduated from Cornell. I put them shoulder to shoulder with any of their friends or my kids, so that really opened my mind up.
It's actually an interesting thing, like on the recruiting side, we were talking about this probably a month ago of, looking through our desk at some of the top performers. And it's not necessarily what college they went to, but it's how they did when they were in college. So that's like kind of the first adult.
That's important. Yeah, exactly. It shows discipline, dedication. It shows stick-to-itness, sticking to something, right? So the grades are very important.
Yeah,
when they
because
get to
it's,
college.
regardless of necessarily where you went.
Also,
a lot of
what
that-
classes they take too.
Yeah.
Is it shows their demonstrated interest.
Yeah, that's true.
Like, for instance, if kids are afraid to take math, you're like most kids nowadays, you're like, I encourage these kids. My daughter is going to be a quant analyst for BlackRock starting in August. She's a physics major.
Yeah.
But BlackRock took her because she could solve problems.
Yeah.
And she's not afraid of machine learning. She's done all that stuff and things like that. And that's kind of the future. And I tell these guys, you better start learning a little bit about linear algebra, multivariable calculus, and Python, because that's what these firms are going to be looking for later on. It's not so much you could do them, but it shows the demonstrated interest and shows that your brain can work to solve problems.
Yeah.
And that's what they're looking for.
It's super important.
Yeah. So you want to, for a resume, because I've seen so many resumes, and my daughter's friends, my son's friends. Well, hopefully you interview one of my son's friends, Alvin. He's a great kid. Smart kid.
Was that the one that you forwarded?
Yeah. He's mentally incredibly tough.
Yeah.
And that's what I look for. That's why I said he might be.
Why do you say
that's right.
he's tough? That's it.
Because he was a star junior golfer. He was recruited by every school imaginable, Stanford, Northwestern. He chose to go to Columbia. And then when he went to Columbia, he lost his golf game.
Yeah.
He just lost it. Yet he tried his damnedest in every round became captain of the team, motivated the team in other ways, and always, even though he wasn't afraid to call out the people that were in the wrong in the team and stuff like that. And that showed me a lot of mental maturity for him because, when your identity, which is your golf game, is in the shitter, it's really tough to bring yourself up. And he brought himself up, graduated with a good GPA, and he has that mental toughness, which I saw demonstrated within the last 3 years, especially. That's why.
That's good. That's good context though.
Go for it, guys. Yeah.
I'm gonna grab some water.
Yeah, grab some too.
All right, guys, we'll reschedule the monthly review. I apologize for holding everybody up, but we will reschedule it. I know you have that
Let me
meeting.
talk to Boris.
Yeah, sounds good. Dan and Casey, you're running that meeting today, right? Yeah. You'll have the meeting at 12:15. And I apologize for the double booking, but you guys can go to that and then we'll reschedule this for the monthly review for next week. Okay. All right. Thanks, everybody.
See you.
Thank you.
fuck? I'm gonna go yell at Randy now. Like, yo, what the fuck were you doing? I'm gonna go back right.
I think he was probably trying because did he need to get like a shit ton for a wrist bump? They're trying probably crush it.
Yeah, now I wanna see his trade, bro. What the fuck was Tesla doing today? Well, we probably got caught in that dump when the market tanked. The pepperoni's the bomb, bro. Shit, I like it.
Anybody watching Google? Flush out.
I've been watching Google.
Yeah,
But
yeah.
I do the short, but it's just too choppy. Like,
I think it's waiting for the market to sell off further. I mean, we have a what do you call this? A small dog, a big dog. Yeah, I think it's a big dog into Qs. So if you break that, I think Google will break too. And also, Google is holding below that 185 support area. That's a key support area. This.
yeah, the Qs is also like for me very choppy. I don't see like a clear consolidation for a big dog.
I mean, it's holding the 9 EMAs in like 5 minutes. I think it's pretty clean. Breaking down.
Oh my God, Tesla. Jeez.
Yeah, Tesla is another one I'm watching.
I just got stopped off Tesla like 2 minutes ago.
Yeah. Tesla setup is not that good, but I really like it if market sells off below the 67.
See, all these breaks are falling.
Yeah, I think there was a big news like inflation. I mean that completely changes that's a worst case scenario. I think if I remember, Jamie was talking about like Fed cut scenarios, and he posted that sheet. And then I also added to that sheet the worst case scenario where inflation starts to rise again. So I think this news actually triggers the fear for that kind of a scenario. I'm short Google from 185.
What time do you short?
I took short at 11:40, 48, 11:50. That's why I got short. Into the retest of 9 EMA. After that, break below 185, got small retest. That's why I started shorting.
Yeah, I got short at
Yeah, for
Google at
me,
10:53, but then I got out at 11.
10:53.
Once I saw this change, I got
Yeah.
short right away. But I got the stop
Yeah.
at 11.8. I didn't want to leave it my stop to the high of the bar, which is a mistake.
Yeah. That's a 1.5 point move
But
where you took entry.
after that drop, I was expecting to see more like momentum coming in. I was not expecting this consolidation, like this ranging.
I think it might be for a trending trade here, the momentum, the way it's going. Like if you see the 5 minute, it's a clear trend in Google holding the 9 EMAs. It's a very clear trend. So I think better to hold for like a trending trade today than a momentum.
Yeah, that's a good idea.
And if you see the cues also, it's a clear trending trade holding the 9 EMAs, and now we're getting some kind of acceleration. Yeah, that's the acceleration. I'm looking at 420s now in the queues. That's the next support area I have for the queues. Maybe.
I'm looking at Amazon is looking or
What
still
support
looking.
areas do you have for the queues?
I have 220, 520.
Yeah, same for me. Yeah. Yeah, I didn't like that stuff triangle in queues.
Yeah, I'm not taking any more breakdowns. I've been getting stopped out of those.
Yeah, I'm just holding my position. I will take a stop on this if I got stopped out. That's all.
So the interesting thing for me is that sellers have been in control after 10 a.m., but they have not been very aggressive. They've been letting buyers, push prices up, 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 and then they sell hard. And they let buyers
Yeah.
push the price up, 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 then they sell hard. So this type of price action made these breakdowns don't work that clean. So it's tricky. So
I have seen this price action. This is like a trending price action where sellers are there, but they are not aggressive.
yes,
So yeah, in
that's
this
very
case, you want to short the pullbacks and this then hold. That's the only way.
yeah. I've been doing that, but sometimes we have these consolidations, like in app Google, also like for example in Tesla. I took the 12 breakdown. I got short there. But it's getting
Yeah,
it's getting bad. So the sellers are not like they're not aggressive.
yeah.
Yeah, this is a good day to study.
But if we have if market sells off to a downside, it will be even better. That's the market trend day today.
Yeah, and on my morning plan, actually, I was expecting this one. I wrote like maybe we have some buying at the open and then we sell after 4 days that we got up. But this type of selling is like
Do you have the link for the other meeting?
Yeah, I mean, I didn't plan for like this scenario, but I was thinking that we are at the highs of the range again. 4 days in a row, so we might see some selling. I had that idea, but didn't plan for that.
yeah. I did plan it. I will send you later.
Oh, we don't have a link yet. There's no link yet.
The big stuff in queues. That's a big rejection.
I think every sell is happening when Trump says something. There is a lot of announcements of Trump. Maybe like 3, I think.
Yeah, we now only Trump tweets to move the market.
So he just announced, like, for example, tariff on Japan.
Oh.
Like 2 minutes ago.
Okay. Yeah.
So he's talking. I'm not sure. I got the alert.
Yeah, I think all these tariffs they actually feed into that inflation fears. I mean, more tariffs means more inflation in the US. Yeah, I'm short Google. I'm holding this. Let's see.
Are you still short, or do you enter on the break?
No, I'm short. I was short from 185. My stop never triggered because still holding the 9 EME in 5 minutes. So I will hold the whole trend till we get some kind of a reversal.
I'm not familiar too much with this type of. So you use the 5 minutes to set your stop, or what's your criteria to enter on the stop?
So my entry was because it's trending, so we're holding the 9 EMA. So I wait for price to pull back into 9 EMA and that stuff. So entry is like a 9 EMA trade. So how we get a close
where do you
about
enter in Google?
my precise entry
11:10.
My precise entry is 11:52.
11:52.
Yeah, 11:52. Between 11:52 and 11:51, when we get that pullback into the 9 EMA, we got a 10:50. We got a red bar, and I took the bar break as an entry.
I see.
At
And then
10:52.
you put your stop about EMA.
Yeah, now I'm using 5 minutes chart to hold the trend.
Right. And when you took it, it got close to your stop, right?
I mean, I took the bar break, so my stop, so the entry is 1870, 184.70, and the stop goes to, let's say, the highs of the 9MA. The highs are 85.10. So I put it around 85.20. So 50 cents of risk. So I'm giving 10 cents above, 10 to 15 cents above the that top that was made testing the 9 EMA.
Mm-hmm. Yeah, I took similar trades, but like once I saw retracing the EMAs, I just exit because I wanted to see more momentum coming. So that was the issue that I have today.
Yeah, but it's not a momentum trade. It's a 10 trade.
I know.
Yeah, I think it's more of a management issue. So like you're using, I think you're using 2-minute bars for exits.
Yes, but it depends. So for me, because it was consolidating Google, right? So for example, I took the short at 11:55, with a big volume there. I was expecting,
Yeah.
oh, this should be momentum, and then I saw like
Right.
they were buyers. I didn't like it. I exit. So
Yeah.
those I took those trades today.
Yeah.
I
You're
was
expecting momentum.
yeah, it's been consolidating, you know, from like 10:55
Recording in progress.
to 11, like 1 hour, and then we broke.
You hear me?
Yep.
Good afternoon, everybody.
What's up?
That's good, man. All right. Ozzy, if you want to share screen or someone can else do it.
I'll send you the link. Oh.
Not in office right now. Can someone else share? No.
I got. Oh, I see your screen already. Never mind. Just gonna do it.
Sweet. Sweet. All right. First one we could start off with can be M goal from today. All right. Just give me 1 second. All right, sweet. So MGOL, I think, was probably outside of TNXP. I would say MGOL is probably the best low flow trader of this month so far. Just in terms of liquidity and in terms of, just kind of the overall read on it. I think that this was honestly probably like an A low float short opportunity. For example, the spot that I was looking at was the push off open that came back up near the pre-market highs into 42 cents. Yep, right there. On the push right up into there, that was it. I don't know if any of you guys remember the one meeting where I was talking about the TNXP, where it went parabolic in the pre-market up into 2, and it was like a mega stacked offer that was there. It was very similar on MGOL today into 42 cents. I would highly recommend any of you guys going back and rewatching your tape and looking at what happened in the 42 cent area and then 41 cents. Honestly, doesn't get more of a stacked offer that happened there. And also I would challenge you guys to like look at the different size that was in there and what happened to the size when high day turned right there. Very interesting move happened on the offer side with those large offers. So I would highly recommend going back and rewatching the tape on that. And then after that, just knowing MGOL is just a dog shit type of name. And, when you have that offer that stacks like that, you're shorting, 41 cents, you're practically risking a penny on this. Liquidity is great. So you're going to get out. And this is something where you have 1 cent of risk and, you kind of try to let it work as much as you can. But that move that happened 30 minutes off open was honestly as good as of a move that you can honestly ask for. I mean, you went down practically like 30%. You went down almost like 14 cents from highs right there to lows. That's pretty much like as good as you can ask for just like an early morning short. I just think that the range that it provided, how fast that happened, and I would in my book consider the tape read on that honestly as close to A+ as you can get. So I would say just overall with all of those factors that was there, this was probably, or so far, this is the best low float opportunity in terms of a day one that I've seen to start this month out. Anything you want to add, Dan?
Yeah, no, pretty much spot on there. I mean, just knowing the history of this name and that the fundamentals behind this historical diluter, you pretty much touched on everything there.
Yep. Yeah, honestly, not too much to dive in there, but just in terms of tape read in my book, that's a A+, sort of like push the highs that turns, and offer the just insane range and liquidity on this price of a name. Cool. So if there's
Any
If there's
questions?
any questions or no questions? Anybody? You guys were viewing this as a day one. So yeah, you're right. Because it was up in the pre-market. You're right. Yes, day two. How is that nuance impact how you traded it? Honestly, like that tape read was so A plus to me that, and the volume that this was trading to me just felt like a day one. That's why I was kind of calling it a day one with the volume that it was doing. But no, you're right. It is a more of like a multi-day runner. But no, I mean just the liquidity and tape there to me, that's something that you really look to push a lot of size on.
And everyone on this call can pretty much push as much size as they want on a name like this.
Yep.
So, yeah.
Sweet. You want to do TNXP?
Yeah.
Which I would say that's probably the best op of
Yeah.
the month so far, probably overall.
Yeah. Do you need a date? Just TNXP on the what date was this? Yeah, there you go. Okay. It was what was the date of it? The third, right? The third? Yeah, the third. Okay. Yeah, so I mean, essentially, I feel like we've also talked about this name in the past, and knowing the history of this name is this piece of shit, historical diluter. And breaking news, simple here, reverse split, right? I think it came out at 8 o'clock on the dot or 8:05 or something like that. Because I missed this, I wasn't at my desk yet. I was getting up, but essentially, yeah, news comes out. You essentially want to short as much size as you possibly can, and while that's also happening, opening up the article and trying to see what's the ratio. So this one was highly A plus relative to others that might have not really followed through because of the ratio. So I think this one was at 200 for one, I'm pretty sure, which is a way more
There's a 100.
100
There's a
for one.
100.
Yeah, 100 for one, which is way more toxic than like a 20 for one or a 7 for one, which we've seen in some other names. So if you can recognize in real time that that's such a high ratio, as well as knowing the history of this name, people in this call have also traded this name prior. They've dropped offerings. Like this is a dilutive name. There's essentially no reason to be long this name. So you slam as much size as you possibly can. And there's multiple ways to trade this. You could use the 2 minute trail as a stop out, but at least for me, if I did hit this, I probably would have looked to hold a majority of of my core, at least for like a 50% down move, 30 to 50% down move in the stock. So, and this was another name that you could have shorted infinite size on, essentially. There was no SSR as well, so you could have just hit the bid route freaking everywhere, and yeah, basically, yeah. Any
Yeah.
questions? Anybody trade it? Anybody beat me to it?
I mean, I didn't trade the reverse split, but I did trade it today.
Let's just
Yeah,
focus
sure.
on the reverse split here. Anybody trade this? If not, no worries. We could just move on to the next one.
Just in terms of opportunity grade on this, I mean, this hands down best opportunity of the month so far. Outside of any like market ideas, I would say that just in terms of like pure breaking news for how often do you find these reverse splits to work like this? Honestly, like a lot. If you have a size that comes out like this, like 100 to 1, that's something that you're gonna have a very good hit rate on compared to if you're gonna hit something that's like a 20 for 1 or 10 for 1 or something like that, not as significant. The higher up the ratio is, the better it works.
We even talked about XTIA from what, end of December, January area, and it was
Yeah.
the same sort of thing. It was 250 for one, and on a similar sort of name. So we kind of went over that, and this was essentially, if you studied that one, you would have been able to catch this one. So
100%.
guys, yep, okay, cool. Want to move on to the IVVD breakout
I go over the
or
Palantir
POTR
first.
first? Okay, I'll go Palantir.
Yeah. Palantir from yesterday.
Yeah. Yeah.
Why don't you start?
Can you do like a 30-minute chart too?
I was gonna say like a daily chart to
Yeah.
start with. Yeah, right there.
Cool. Okay, so yeah, PLTR earnings, pretty simple, comes out strong, base is over 100, and we just start consolidating for the first day right after earnings, as well as day two earnings. And the day three, we break out over highs, and now we're consolidating over that 105 area. And I mean, pretty simple trade here. Yeah, maybe zoom in a little bit onto that. Yeah. There you go. Yep. Pretty simple trade here. You just buy calls over 105, 108. I think it was like 108, right, Casey? 109.
I don't know. Something like that.
High
I
day,
mean,
yeah.
just in terms of, I think it was pretty decent RVOL on the day. From the daily perspective, breaking over those highs, and then you get, a good like 3 hour consolidation above VWAP with a very, flat top for a breakout. Pretty good, and the volume that came in on that breakout too was pretty well. It's pretty much there. I mean, in terms of, this was kind of what we've been talking about in prior meetings, but about, what market are we in? And, something that I'll say for us, we ended up passing on this Palantir. I think that it was a great buy though with calls, that if you got that breakout and then seeing how much, those things really picked up into close. I know some people are, taking sales into close, but one thing I'll say is that, we've been seeing with a lot of these RSWs that the ones that have worked so far in this market have been the ones that kind of have those day one catalysts. Like, the Oracle, that one worked well.
Or Baba.
Or Baba that had those intraday, catalysts and stuff like that. But we've seen something like, RKLB from 2 weeks ago that was setting up RSW breaking out of a daily range. And, that one failed pretty miserably. And there's been
ARM as well, the same thing.
ARM as well. There's been another one of those. So that was kind of, from our end, we wanted to be, right now we're very like hands off until something very obvious is hitting us in the face. Like, we want to see the catalyst, we want to see some sort of range forming with the breakout, RVOL's there, all of those, right? Palantir though was lacking that catalyst for us to be taking that trade. So we ended up passing, but I know that there's definitely a bunch of people who did take this. So if anyone did take this, do they want to share how they manage this? No one took it?
I took it day one, and then I lost on it, so I just left it alone. I tried day two, but there was really nothing for me there, so I moved on, and then I missed day three.
What'd you do on day one?
Day one, I got in within the first like 10 minutes or so. First leg, it worked. Sort of like a hitchhiker.
Can we go to that you're talking about? Can you go to the day one of Palantir, Riley?
And the two, if possible, please. Yeah, so on the break of 105. So it broke pre-market. Was doing decent volume. Right there. Right there. After that, that wick lower is right here. So I got into the next green bar on that break of 105. So how I played it is, bought that breakout 105, sold half or 80% into like that first move up towards 106.50s, and then on that pullback on after the third red candle on the first green or the second green, I added, thinking that we're gonna get a second leg higher, right? So I added with size, so everything that I cover, I added back, and then it immediately just closed me out below 105. So that's it. And then I tried it again above 106, and then I ended up getting stopped out right there. And I was like, no, that's it, moved on. What should have worked? It was just one pullback in, and then go higher.
Sweet. Have you? I know I've talked to you a bunch on the side. Have you had any experience? Or I mean, we could talk about it after. But just curious how you've been doing with the, maybe adding into some of those.
Right now, especially
some of
with
those
this type of
trades.
market is we have noticed that we only get one leg, and then that's it.
Yeah.
If you miss that one leg, it's like just step away from the name because you'll probably get stuffed into or something. It just a lot of plays haven't been working. They just tend to roll over.
Oh, it's definitely very good to notice it though. Sweet. All right. Last one that we can do is can you go to IVVD? Which day was this? Yeah, it's gonna be the now you have a daily too, right? Okay. Yeah, so I mean, day one, absolutely insane amount of volume. Traded like what, almost 500,000 shares that first day. And then day two, you get pretty big volume drop off that does like 97 million, right? But we're still holding up in the range. But I thought that the day three was a very interesting day three sort of long. Right off open on that day three, we wick right under the prior day's low and turn on SSR. So SSR was turned on, and then we wick under the prior day low, turn on SSR, come up, and we just start grinding now above VWAP, above VWAP, above VWAP. And VWAP honestly consolidates for what, like almost 2 hours, and you have a pretty 131 breakout that's just setting up on the intraday. To me, that's not the spot to really size. I look at that more as like that's a starter position that would get put on because you're not breaking the day too high. But just in terms of tapping on SSR, wicking below the first day, and now you get above VWAP and you're just consolidating, and then that first breakout comes and you get a decent amount of volume that does come in on that breakout. But what you have to be thinking about from a daily perspective is the amount of volume that was turned over on that day one. Now day two, the volume starts dropping off. If day two high gets taken out, think about how many shorts could be involved in this, or how many people can end up getting stuck if this thing doesn't start dying but the volume's dying off. It's pretty base simple, the liquidity traps. I'm sure you guys have heard of it. This was a very good example of it. By no means is this some smack out the park sort of trade, but just in terms of like an idea trade, I think that this was a very, very good long low float idea trade. You buy the 131 breakout with starter size, we start holding over the day two high, you start adding versus maybe the swing low at 120s, and you see where it goes. And even in the after hours, you got another breakout too that happened through the intraday high, which was another very good trade there. One thing I just want to kind of get this call going towards a little bit more is like looking more so towards the long side on some of these low floats and not just being so bared up every single day on all of these. I know me personally, I probably trade like 80% short side on low floats, probably 90%. But there has the TCTM that we went over last week. You have IVVD, even SLXN from a week ago or 2 weeks ago. That had some very, very good breakouts as well. Where my mindset is, what if you're able to get to the point where you make money on the long side on these maybe day ones, or even on this one right at day three, and you're not just so focused on the short that you're missing some of these like really smack you in the face type of long opportunities, and you make some money on the long side, and then once the short ends up setting up, now you have a P&L cushion to kind of play with on that side, and not just looking for the short. I'm curious if anybody in this call trades these low floats to the long side, or majority of people are very short bias on them as well.
I trade them a lot to the long side, and I think the Miami guys do longs as well.
Sweet. Did you take any longs this week?
Yeah, I took some longs in quantum yesterday, just like playing based on the tape.
Okay.
Yeah, but yeah, so I like to get these like when they're squeezing right below VWAP and just get long with the tape.
Yep.
And then I kept adding. I was kind of being too aggressive. So I added a little above high a day. And yeah, these are just scalps, but some of the ones that are like extremely low float, I tend to look more at because they have more like squeeze potential. But like quantum probably like the price action, I could tell like a lot of people weren't shorting it.
Yep.
And sometimes the ones that people are shorting a lot can be the better longs when they squeeze more.
100%. I mean,
Or if I'm like earlier on the idea, then they can be really good longs too. Like if I like saw that day one or something, yeah.
Right. Yeah, I fully agree. Yeah, I mean, good job not fighting at the short side and getting along that sub VWAP trap. It's a good trade.
Thanks.
But yeah, I mean, kind of just to like recap though, I really don't think that there was anything super crazy to start this month out. I do think TNXP was probably the better opportunity. MGold today was a decent opportunity as well, but I don't think that there was any, crazy trades that really set up. I mean, I think we kind of covered the baseline from the week. I would say that this month has just been a little bit slower to start. And just being able to realize that and saving your your risk for when something does set up with the month, whether it's something to do with tariffs, whether I don't know, any Palantir ends up going crazy in a couple of days and that sets up a big short. But the mindset more so right now is kind of just sitting on hands and just waiting for very clear opportunities to set up. I think it's very important to be doing that in these slower type of months.
Can you guys talk more about like how you pick which ones to watch most closely off the open? Because for example, like there were other ones I was looking at, like the lottery one today,
Yep.
that it wouldn't have occurred to me that like I should have been just like staring at MGOL and like that was the one I needed to be like diligently watching tape on. So could you kind of explain more like how you pick the one that you're like locked in on off the open?
Yeah, sure. For one, I mean, MGoal was, pushing right up into open. And, just going into open, it was, just with volume, it just felt like it was the more in play name. And, we have scanners that just show like, what are the top names, just basic ones to show what are the top names up. I mean, I was watching LTRY, but the thing with that and why I would choose MGoal over that every day of the week is, LTRY is just opening, just flat. Like it wasn't any there, like, if that thing was opening at maybe like say 220s and did a first move up to like 260s, I'd be very interested in that. But it's just kind of going sideways, not really opening, at the highs of the range, or, it also wasn't really up a super amount. I mean, we went up in the after hours and then it kind of just ended up failing from there. And the volume it was doing just per se off open, like when that volume comes in off open, like the way it's trading today, you could just tell it's not a in play name. Like not that many people are watching it. That's why it's it's not really moving around that much. MGoal though, like look at the volume that came in off open. Like look at where it was opening in the range. I'm pretty sure it was like the top gapper on the day as well. So just those little things right there. Like I don't even think LTRY was even on any of like the
It wasn't on any scans because it wasn't
Yeah.
up enough.
It wasn't.
We had it on watch, but it wasn't like super. I mean, you could just look at the volume, like Casey said, like compared to yesterday. It just wasn't really trading. It was in a what 10-cent range. Yeah.
Okay. Yeah. Just like for an example, like, and then also, are there like actually like static factors or like things about the dilution or the float that like you're like, because sometimes I also trade a lot of large caps. So it's like if I had the intuition or like some way of telling that, oh, MGOL would be like an A small cap short today, then maybe I'd like choose to watch that over like some large cap name. So is there anything additional that like not even just compared to other small caps, but like in general that can tell you like, okay, like today, like this one small cap is like higher priority than any large cap, or just like this is like a name I want to be in.
Yeah. I feel like part of that comes from like experience. Like me and Casey been main focus for our trading careers have been like low floats, and like I think in the past we've traded MGoal like 4 or 5 times like on prior like run days. So like when you see a name that's like running and like you've traded it before and you kind of know the nature of the name, that's something like you're interested in.
Mm-hmm.
Um,
And I think it also comes down to just like your pre-market game plan. Like, our group, this was the top name that all of us were talking about watching. Palantir, it was, the gap kind of failed. It wasn't opening at the highs of the range. Like if Palantir was, if that held the gap and that was opening at like 115s, 116s, like MGoal would have probably been a side watch. Like I would have been watching Palantir more so. But, me personally, I didn't really see a ton. Palantir wasn't super interesting coming into the open. LTRY was not super interesting coming into the open. IVVD wasn't interesting coming to open. And like MGoal was the top gapper on the day. And it was doing good volume. So that's why that was the main focus.
Okay. Gotcha. Thanks.
Sweet. Yeah, I mean, yeah, hopefully we get some more opportunity that picks up soon. That, we can start getting back to some of these meetings being more so on like, month making ops and stuff of that sort. But I mean, still was, a couple ops here and there this past week that you definitely could have, just started out the month though on a good note. So I would highly recommend just, reviewing the tape on MGoal from today if you guys recorded your screen, and then also just, review, the TNXP reverse split on why that was such a good opportunity. And then, I mean, yeah, we'll definitely see what's to come in the following weeks. But yeah, I think a very big thing that everyone should be doing within their group is just keep game planning for any sort of bigger picture ideas that could be setting up anything with tariffs. That probably should be something throughout the month. So definitely having game planning that with your group is going to be a big thing. And then also again, like if it's just a slow day, there's no need to
No need to tweak out
there's no need
on
to-
random trades.
there's no need to push risk because you're going to want it when that opportunity of the month, that's the A+1, does set up. So yeah, I think we could end it here. Is there any last remarks?
Yeah, I have one more question. What's the smallest reverse split ratio that you guys would be like, would definitely want to be in?
20, anything sub 20. I kind of label that as like nothing.
Okay. Is a 1 to 20 something like 1 to 100? Like you said, like obviously, like you're always wanting to be in that. 1 to 20, are you always
It's
wanting to
that-
be in it, or is it more nuanced? And what are some of the things you look at?
So just think of like it in ratios. If my short key is I short 1,000 shares for a 1 for 20, I'll short 10,000 shares for a 1 for 200.
Okay.
So like the more the ratio is, the more aggressive I'll hit.
Yeah, the ratio just comes down to sizing.
Yeah.
The smaller it is, I would still like
You still hit it,
We would still
but
hit it, but it would just be
not-
sized a lot smaller. But like
Yeah.
once you get like if you see those 1 for 100, you see a 1 for like 250 like XCIA was, like that's something that you kind of want to risk like a little bit of like your stop on something like that. Like you those are like the A+1s.
Okay.
Like 1 for 20s, there's nothing wrong with taking them, but they
risking like
they just
5% of your stop.
yeah, they just wouldn't be sized.
Not even.
Yeah.
But like a 1 for 100, like I'm giving that half my stop.
Okay. Gotcha. And like, is like, so relative to like how much move you're expecting, like you trade them proportional to the price, but like it doesn't make it better if it's like a $5 stock versus like a 50-cent stock. Would it?
Some of them, yeah, depending on the nature. Again, back to like the nature of the name. Like if it's like a TNXP where like there's no reason to be long, opposed to I've seen like 1 or 2 other like reverse splits that were on like a more like we call them like real names or like a real kind of company, I guess, where like there might actually be investors in it. Then like I won't be as aggressive in it. Does it make any sense?
Yeah. That
But
makes
yeah, I mean,
sense.
mainly it just comes down to sizing. Like if you know the name and you know that like this thing's literally like a serial diluter. Like, and the other thing I would encourage you guys to do is kind of like go make a database of them and go back and then just track like what's the projected down moves for X ratio. So maybe if you go back and you test like, okay, if it's a 20 for 1, I'll look at every single 20 for 1 that's ever come out in the last say 3 years, and then every 20 for 1, it only maybe goes down like 10%. But if I go back and I look at every single either 50 or 100 for 1 and beyond, so like 50 to 100 or 200 300 for 1, and you notice that maybe they fade 50% or some of them even fade 70%, like maybe that's a statistic that you kind of want to track. But that's just like some simple data work you guys could do, either in Kite or in Liberator or whatever way you guys want to scrape your data. But
And just this is my final question, I promise. But are they always like even numbers like that? The only reason I'm asking is like for making my alert more simple. Like is it only going to be like 100 or like 75 or 50 to 1? It's not going to be like something weird like
you never know.
1 for 22 and a half.
No, I have seen 1 for 37. I've seen that before.
Okay. Okay, good to know. Thank you.
Yes, the numbers could be anything. It just depends on the corporate structure of the company. They could do whatever amount they want.
Okay, cool. Thank you, guys.
Yep.
Appreciate it.
Any other questions before we pack up shop? Cool.
Sweet. Again, anybody has any questions throughout the week, or anything, you guys are free to always reach out. So,
Yeah, I'm just checking the chat here. Yep, cool. Nothing in the chat. All right.
all right, sounds good, guys. Trade
Catch
them
you guys
all.
later.
Talk to you guys Friday.
Thank
Thanks,
you.
guys.
Bye.
Yes, sir.
I mean, it doesn't matter. I was just like, it would have been nice if we could have like made sure on the spot. still because you have the map, right? So you just yeah. I don't need this then. Wait, did you buy this? No. I don't need this. You have it? Yeah. Oh, dude. I wish I knew. I could have given that to you like a week ago. So that only has what's size? I haven't downloaded it. I haven't checked. Alright, but are these ones good then? Yeah. They're decent. Like definitely like go through them. I went through all the docs, but the thing about docs was yeah, I did, but like I definitely yeah. These are just I think
Tissue fundamentals.
I think Dogs is big into the stats, which was an interesting because he's like this. He'd be like, alright, like this stock is overcrowded on day one, news gapping out, like based off the stats. You won't have like a 70% probability until running it out drops. So take the consolidation play rather than trying to get a double off on the top.
And then he was over the fundamentals.
He does. Yeah, he does. He actually does a really good job at that. He'll tell you exactly like to a T what to look for. Just like he'd be like
Can you make a copy of that? I'll give you that. I'll give you $5.
Dude, how much you can flash drive, bro? I've had that, man. I just give it back to me so then I can put the new one on. No. Alright, fine.
Give it to me. Wait, so if I put this into my computer, it just downloads it, and I get
Bravo, it's a flash drive.
You never used to.
Yeah, I'll show you.
No,
Go fast.
get out of here.
Oh, you going to the cloud?
Yeah.
Wow. So you got this.
Like, I don't use USBs. I don't know how to use USBs.
Yeah. It's just like oh wait. Oh what? Oh wait, maybe I put it on here. Yeah, there we go. And then I'll be all that.
One minute.
Yeah. I think the longest one's like 10 minutes. Now,
So do you start from zero? Or
I mean, nah, bro.
where do you start from?
I've
Essential terminology.
I guess, but it's like you kind of know.
Yeah. Okay. Let me just do that right now on my computer.
Oh yeah, you can. Yo, the only thing with this one is it's a DLF file, so you can't do it on like a Windows player.
No, I'm probably gonna go on Ducks first, and then once I go on.
Okay. Yo, so then this is what you do. This is huge. When you're done with it, eject.
What? No, right?
No.
No, I'm chilling. I'm
It's
gonna
just
just do
to-
it right now.
It's just to keep it safe. Yeah.
Wait, when I'm done with all the videos?
Yeah,
Say?
like download it onto your own personal shit, right? Like
I'm gonna
just-
download on this computer.
Yeah, that's fine.
And then you can watch it whenever. And then
And
just
I
give
have
them
to
back.
eject, and I can
And then
watch
when
it.
you take out the flash drive, yeah, you have to press eject.
You
Don't
can
just rip
just.
it out.
It's not. It's not like a pair of headphones. Just. No.
I'm gonna just add you after the class. We'll do it together.
Alright.
So then let me get it then. I'll do it.
You can do it. Yeah.
Oh, you can do it right now then.
Yeah, you can do it right now.
Let me see you do it right now. Drugs.
Hey, what the fuck we doing with Tesla, bro?
I don't know. I honestly don't know, dude. Tesla kind of fucked me up today. I lost like 400 on it. Let's go. What do you do? Bias?
It was a SanDisk. I didn't realize I put it on that. Yeah.
And that's it, right? You're good?
And then which
No,
one?
no.
Is it
Now
here?
create your. Yeah,
But
it's right there, dude.
No, but it's here, right? No, this one.
Dude, you literally just.
I know, but where do I copy though? Because remember he says like everything that you put in is.
Oh, it's your local disk. It's C.
It's C, right? Ah, okay.
So
So
just create.
just.
No. Because that's
Yeah.
gonna take it out. That's gonna remove it from the USB.
Oh, yeah.
Just copy. Yo, thank God you guys got me.
Paste.
That's it?
Yeah, man, it's gonna take a couple minutes.
Wait, yank it. Am I tripping? And then what do you do? Eject or fuck the eject?
You gotta do the eject, bro. I don't know why, honestly.
Why
'Cause
do
I
you have to
have
do the
ripped it up.
eject?
Because it's supposed to, like, if you pull it out, it could corrupt the drive.
And then you could lose memory from it. Or
Is that what it is?
Yeah.
I gotta yell that so bad. Dude, you know about being gay, son. We're seeing two random guys kiss each other in Hell's Kitchen just walking by. What do you know?
That was a high kiss, bro. That was just like
That was a crazy ass kiss. Bro, that was crazy. That kind of made like.
You're weak. Like this is what I wanted to see.
That was crazy, bro.
Like I didn't see this out there in Texas. That's why I moved over here too.
Bro, I feel like I should do this for you, man.
Yeah, just go over to
I got you, Randy. I got you. Wait, how were you able to get this again?
Yeah, bro, that's why you created it.
No. How did you get this? Did you download it or online? Sure.
That shit's like, dude, that's like 5K.
Torrents?
Yeah.
I have USB with Infested Underground. Like 3 or 4 recorded.
You said, give me that shit?
Absolutely. It's for my personal experience. That's how I started.
Yeah.
And it was like, yo, SMB's training videos or BlackBerry.
You're not gonna like this then, because I think it's kind of booty.
No.
But it's worth a look at.
I want to start looking more into like stats and like data and things like those things.
So that's Doug's, but he only fucks with low floats. But you can apply that too.
Yeah, it's just.
in your trading career and how it's going to play out in your future. And right now, we're going to talk about the most important indicators, and that's going to be in your trading career. And a lot of people be using a lot of indicators like RSI, moving averages, and also VWAP. For all that indicators, I do not use them at all, and I only use volume when it comes to indicators. So right here, I'm going to give you some of the useful tip of why you should pay attention to the volume. So first of all, I think volume in my trading career has played out a very important role, and it has the power to predict momentum shift, predict when the stock is likely to top, and also most importantly, you will know the volume ratios to have the volume to compute the previous day. That's going to be very helpful. And for that, there's going to be multiple different variations for volume as well. So understanding the volume variable, I would say volume variations will boost your winning percentage, I would say massively. So I think back in the days when I was trading in 2016 to 2018, I was learning about volume, but hasn't put the volume into my indicator yet. My winning percentage was around, I would say 65% to 75%. After I used the volume indicator, my winning percentage jumped to 85% to 95%. So it's a really useful indicator, especially after you have the fundamental patterns down. And once you understand the indicators of volume, then your winning percentage will go up significantly. So one thing that volume, it's not a single indicator that you shouldn't be using just one line or one number. It comes with multiple different variations. So it happens on different patterns as well. So different pattern do have its own, I would say, unique way to use the volume prediction. So learning about different variations when it comes to different patterns is also very crucial. So number 4, volume can help you to define when the momentum is likely to shift and when the pattern is likely to top. And also it's going to be very useful when you try to top tick or bottom tick a ticker. I think top and bottom tick, it's not that important, but when it comes to traders, whenever you cut the top or you cut the very bottom, I think it feels much better than getting the entire trend. But the profit's not that much, but getting the top and bottom, it makes me at least very happy. All right, so right here we're going to talk about the volume analysis. This is going to be the part 1. Volume analysis, this is the general volume prediction for all patterns. We haven't gone into a specific pattern yet, but here is the basic formula. So let's call it this formula S1 now, since we're going to use it later. So first of all, it will be the pre-market volume times 10 to estimate the entire day volume. It has to be around 9:29:59 seconds. You get the entire pre-market volume. Use that volume times 10. Now there is one scenario that whenever a ticker trades volume in the after hour, and a lot of people are going to ask me, hey Steven, how is volume predictions going to play out if it trades on previous days after hour? Then we traded a little bit volume in the pre-market. So do I use the after hour volume and plus the pre-market volume times 10? The answer is no. You only want to use the pre-market volume to estimate the entire day volume. Do not count the after hours volume. So that is very important to remember. You do run into this type of scenarios, especially on gap up short, which we're gonna talk about later. So once you get the volume after market open, there's also another formula is going to be useful to get a more accurate pre-market volume prediction. It's going to be the first hour volume plus the pre-market volume times 4. This is the second formula, so we're going to call it S2. So the reason why I have S1 and S2 is normally S1 is to estimate the entire day volume without any resistance. You don't know if there's resistance or not. So when you have S2, that means in the first hour, if the resistance is really active and you push the stock down, now in that specific scenario, you want to use the S2 equation to calculate the entire day volume, since the pre-market volume prediction is not going to be very accurate, as I talked about, that you don't know if there's resistance or not. So on the second one, once the resistance has played out, you will know if the momentum is going downwards and it's going to lose liquidity throughout the entire day. Then S2 is going to be more accurate formula for compared to S1. And if there's no resistance for whatsoever for the chart, then S1 and S2, you can use both of the formula to get much better accuracy on the volumes going to trade throughout the entire day. And also you can use the entire day volume divided by the float to calculate for rotations as well, and which we're going to talk about in the later slides. So this is going to be the very, I would say, basic volume analysis formula you have to remember. It's very, very helpful, and it can be used in all types of patterns, including the pattern you shouldn't be trading. Like the $1 billion cap, the market cap exceeds over 500 million and flow exceeds over 100 million. Volume analysis is going to be, I would say, useful for all different markets. All right, so let's talk about volume analysis 2. This is going to be the part 2. And volume analysis that you have, first of all, you have the S1 formula, you have the S2 formula. Then we're going to talk about the momentums. So when the stock is going up, which means it's upticking, especially when the stock is going parabolic. That means when the stock goes parabolic, that also is going to attract more buyers, and which means you're going to get a little bit more volume compared to the normal estimation. So in this case, I would use a formula which will be the pre-market volume times 15. If the stock tends to have it's upticking in the pre-market, going parabolic in pre-market, and also going parabolic after market open. And using the formula pre-market volume times 15, it's going to be more accurate compared to the S1 equation. Now, same thing goes to the downside, that when the stock is down ticking and let's say you ran into a resistance, hits a massive wall into a resistance consolidation, that means the stock is likely to lose its momentum and stock is going down. Then when the buyers or the traders are seeing, okay, well, the stock is going down and there's not going to be opportunity for you to dip buy, then in that case, the formula changes to pre-market volume times 5. So it's going to be very important that you want to look at the long-term chart, especially whenever you are trading any type of pattern. And if you see a large wall of individual resistance, then you want to change the formula to pre-market volume times 5 after morning rejection. Now, same thing goes to the stock is going parabolic. If there's no resistance and the stock is trading massive amount of volume in the pre-market, and also it's likely to go parabolic and use the pre-market volume times 15. This is for more of a detailed of how to really change your volume estimate. So upticking and downticking is going to be very important whenever you want to look at the entire, I would say, the overall trend, and also make sure to check if the chart does have any resistance or not. Now, one of the other thing is when the stock is going down ticking, that means volume estimate is going down. When the stock has low liquidity or is losing liquidity compared to the average volume estimate. So let's say the ticker traded 10 million volume in the pre-market. So the entire day volume estimate is going to be 100 million. But when the stock is down ticking or hit a massive wall of resistance, then you're only looking at 50 million. So when the volume is losing its liquidity, it's great for shorting because not many buyers are bidding the stock of going up, and also when the stock is going down trending after hitting a resistance, it's not going to track more liquidities, and the less volume you trade, the better it will be for you, especially when you are shorting into a resistance. So for the last point, we'll also be covered into the later slides. As I talked about for this entire course, everything is connected. So once you finish the first time, make sure to go over the second time as well, since some of the points is going to be explained in the later slides. So you want to combine the earlier slides and the later slides together. So right here, I want to go over how to get in before the sympathy play decides to spike. So first of all, you can use the volume estimate to see how much volume is going to trade throughout the entire day, and to see if it's going to exceed the actual max volume on the intraday volume. So for example, let's say the average intraday volume is around 30 million to 50 million, and the pre-market volume trades already 10 million already. Then the entire day volume estimate will be 10 million times 10, that's going to be 100 million. And it's exceeding the average volume between 30 to 50 million. And that's where the stock has a great potential for it to spike after a sympathy hype. And second is you want to find all tickers that's related to the main play, a similar company that does the same thing. Either it's a company that does the same thing, or it's a sub company by the main company. So those 2 points are the most frequent one that tends to spike after sympathy hype. The third one is you want to choose the one that trades the most volume compared to all ticker that's in this sector, and that's where you want to start looking at consolidation breakouts or afternoon breakouts, the one that tends to have the most volume estimate. And number 4 is typically sympathy play. They do extend 1 or 2 days, and also if it's a low float, make sure sizing small. If it's a higher float, depends on how much volume can trade it, and also how many times the flow is going to rotate. Specifically for flow rotation, I will go into explain in the later slides. But flow rotation is going to be very important to be able to predict how the sympathy play is going to play out, and also is there enough volume to support your size as well.
Just the firm gonna sell it. Just if we break the 21.
So right here, after we went through the individual resistance and consistent resistance, I'm going to talk about some of the red flags for you guys to stay away from. Because once you know what to stay away from, once you know what you should be focused on, then you're not far away from being consistent profitable. So first of all, a couple red flags. If the stock has high float and high market cap. I'm talking about that if the float exceeds over 50 million and market cap exceeds over 200 million. Now, number 3 will be the low frequency. If the stock pattern does not happen that often, then you shouldn't be trading, because you want to trade a pattern that's consistent, happens pretty often, and that can bring you, a flow of profits. If it only happens once or twice every year, it's not really worth to go. First of all, you don't even have that much samples to track the statistics. You need 150 samples to be able to, confirm a pattern. So number 4, if the stock is way too easy to borrow. Now, if you haven't seen a runner running up 100% in 3 months, and all of a sudden you see a ticker that's ran up 100%, 200%, and it's very easy to borrow. Sometimes you don't even have to borrow. You can straight short it from your platform. Then if it's easy to borrow, if it costs anywhere between 1 cent to 5 cents, 0.005 or 1 penny, because everybody can get shares to borrow, and it makes the shorting very crowded. First of all, you haven't seen a ticker that's going to be tradable for 2 to 3 months, then all of a sudden you see one and it's easy to borrow. That makes it more short crowded, and it's going to cause a massive squeeze. So this is another red flag for traders as well. And number 5, you see crazy halts. I'm talking about 15, 20 halts in one day. Don't trade that. If you trade it, you are going to lose, because when the stock gets halted, it's going to be less volume going to be traded. Nobody know what is going on, and volume is pretty much everywhere. So there's no actual consistent volume because it's getting halted every 15 minutes. I will say if it's on the first green day, always stay away from the first green day. Stay away from crazy halts. The next point will be aggressive upticks combined with oversitting gap down pattern. whenever you are using an overextended gap down, which I will be talking about later, it's a short pattern. Basically, you are shorting into yesterday's consolidations, but most of the overextended gap down pattern opens with the SSR. SSR is short sell restriction. And that means you cannot short into the bid. You can only short when people buys into your ask. And whenever you see a stock is on SSR, that means it's not good for short sellers. And you see aggressive upticks, that means the stock is gaining volume. And if it's a nano flow or micro flow, overextended gap down pattern always get destroyed. So it's not profitable at all. And this is one of the scenarios you want to stay away from. And the last one is specifically for momentum shift. Now you want to track separately for once the momentum start going downwards after 3 to 5 days run up. Those type of statistics do not follow the average statistics of pushing down 75%. It's really heavily dependent on where the resistance is and how much the first red day pull from the high. So building a separate spreadsheet with how much drawing percentages from the top for multi-day runner is going to be very crucial. Then you want to stay away from biotech stocks, healthcare stocks, they're the same thing, and energy stocks. So those are all the red flags for you should be avoiding, and this can keep you very consistent in the future. Okay, so in this slide, I'm going to talk about the long-term statistics versus the short-term statistics. And what is considered to be a long-term statistics is that you are tracking the market at least for 1 to 2 years, and also you have over than 150 samples to support your theory. And beginners, traders always focus on the short-term stock behavior. So for example, in the current 1 or 2 month that let's say the biotech is really hot, or energy sector is really hot. So they only focus on energy sector or biotech, and they only have maybe 3 to 4 samples, and they will judge the stock behavior based on that 3 to 4 samples from 2 weeks ago. So that is not very ideal because whenever you only have few samples and you're saying that the biotech is going up 1,000% and 2,000% in the last couple of days, and I want to find another biotech that could go up 1,000, 2,000%. But the only difference is different biotech has its own fundamental. Their flow is different. Their market cap's different. So the bigger the market cap, the more money it needs to be injected into the market cap for the stock to go up. So that has to take into considerations. So not all biotech sector stocks can go up 1,000%. And I see a lot of beginner traders making the same mistakes. They think that we had a few breakouts in the biotech sector, and I think the next one, biotech sector is going to break out. And what will end up, the result will be, is they chase into the 3 to 4 biotechs, and then the pretty much after morning push, the stock crashes after forming a consolidation, and they lose all their money. So this is where short-term statistics do benefit you if you have a long-term statistics, and do not always, I would say, focus on the short term. Whenever you always want to focus on the bigger picture, and also pay attention to how's the short-term statistics are going to benefit you from shorting them when people are getting used to buying biotech sector up 3 to 4 plays. So this is a good, I would say, psychology counter. Now you can use the beginner psychology to develop a strategy, to develop your counter strategy to the beginner traders, and that's where you can make a decent profit from. So I have been observing the market for a very long time, and it always happens whenever there is a hot sector and everybody tends to buy at the open after the 3 to 4 plays, either the short getting squeezed, then they will still be chasing, and the shorts will be a little bit too scared. That's where nobody's focused on the long-term statistics. This is where your edge can come from. Whenever there's no resistance, you can short into the fear of shorts are not going to get in. You also can short into the behavior, the constant behavior of people chasing after market open in a hot sector after 3 to 4 plays. So that's why I do not recommend all shorting into the first green day and the first hot sector after 3 to 4 months when there's no play. For that point, keep in mind, And also by observing short-term statistics, it's very helpful for adjusting your strategy, but it's not good to repeat them. So once you are observing the short-term statistics, and you can make that adjustment into your long-term statistics and look at the overall picture to see what has changed, what has not. Based on from my observations with the short-term statistics, majority of the time they do not change. The only time they change is whenever you don't see a play between 3 to 4 months, and all of a sudden there's 1 to 2 plays that go up 1,000%, 500%, then everybody is going to be in that ticker. That ticker is going to get really crowded because they haven't seen a ticker that's going to make them money, and this is the big potential for a very long time. And whenever you don't see a ticker for a long time, and you don't see an ideal ticker, and all of a sudden there's one popped up, everybody tends to sizing a lot bigger than usual. That's where they make the major mistakes. So you do not want to be that guy, and always avoid the very first play after a while, and always focus on the bigger picture. And for this specific mistakes, most traders do make the same mistakes whenever there's no play for 3 to 4 months. I would say everybody gets a little bit too eager, and the same thing happens to me as well. It happens to me in the last 7 years for many, many times, and I made way too many mistakes. So I would say that I want to put this one as your trading rule, that you want to write this down, that whenever you don't see ideal ticker between 2 to 3 months or 2 to 4 months, always avoid the first two major play that went up a couple 100%, because those are very dangerous to short, and they do not follow the normal statistics, and it's going to be very crowded, too much volume, and you will see when the volume's getting too much, but most people stay in there anyways, and that's how they make the big mistakes, and they have to use the next couple plays to make their money back. So by the end of the day, you will come out even, and I don't think it's really worth it, and it's much better to avoid the first one. And the last point is for you to be very sure with the long-term statistics, you will need at least more than 150 samples on a strategy before you start trading a pattern. And for pretty much all my strategies, I have around a couple hundred samples in one strategies in the last couple years. If you do not have the samples, if you are starting to trade this year in 2022, 2023, and you say, hey, I do not have the 150 samples in the strategies, either you can join the Freeland Challenge, you can see all of the statistics or monthly report in the last couple of years, and you can plug that in. But when you are plugging the chart or other people's chart into your own statistics, always go back into that day. I would say either you want to replay the chart, or you want to either memorize the chart or look at them, I would say, every single day to print that in your head. And in that way, it's going to be an example that's in your head, and it's much better to say, hey, I want to trade this pattern. Let me go back, look at my statistics sheets. That's where it takes time. Second, when the samples, you are not really experienced by yourself, you don't have that confidence in your mind. So that'll be the major problem, that people take other people's statistics and they think is going to be helpful. The problem is, if you only see the result, it's not going to be helpful whenever you're trading, because the other people has the confidence, since they tracked them one by one by themselves, and they have the confidence that built from the very bottom. But if you are taking the result of other people's spreadsheets, then you will not have that confidence. And there will be a significant difference when the trading result comes out for one that builds the spreadsheets from the very beginning, and the one took the result of that spreadsheets. All right, let's talk about the buying strategies. This dip buying strategies I've personally been using for about 7 years now. I've been tracking all different types of buying strategies, as you can see in the trading technique and also in the Duck Cylinder courses. There's a buying strategy called the pre-market dip buy. That specific strategies only works on a low float and really depending on the market seasonalities. So if the market was really hot, if it's trading 100 millions every day, then the pre-market breakout works out really well. But it does not work on if the statistics or the volume are not very stable. So I kind of left that one out. So in this specific course, I only want to focus on the dip buy. This is high winning percentage, high reward, and also it doesn't really happen that often. That's the disadvantage, but it does have the ability to sizing much bigger, and also there's a much bigger reward than the pre-market breakout. Let's talk about a couple of the criteria. First one is the market cap has to be over 1 billion. The minimum is actually 500 million. Of course, if you stay as long as over, if it's 1 billion before the momentum shift, you're good to go. If the initial market cap starts under 100 million, it is okay. But if you ran all the way up to $1 billion market cap, then the dip buy strategy still work. Of course, the higher the initial cap, the better, because higher market cap ticker tends to have much better fundamentals. The second one is it has to be running for minimum 3 days. So overall in 3 days, it has to be up at least 300%. It can be around 2 days, but 2-day criteria has to be much more strict. It has to be up around at least 1000% from the bottom. So 3 day, it's 300%, 2 days, 1000%. Then number 3 is the 50% pullback is needed after its momentum shift. Either it's a parabolic drop or a consolidation breakdown. As long as you can see the stock instantly pulls back 50% from the top within 30 minutes to an hour, then that's something you want to be focused on. That will be your dip buy strategy. Now there's 2 small points I want to cover. First of all is offering doesn't count, but most of the time that offering occurs in the pre-market or in the after hours, so those 2 don't really have to pay attention to. But if the stock does T1 or T12, then T1 is a news pending, T12 is getting investigated by NASDAQ. So either both of those 2 happens, then the stock instantly drops 75% from the top. So you don't have to dip buy that, because T1, T12 typically will never come back. Number 4 is if the stock trades massive liquidity. So the stock needs to trade at least 100 million volume on the intraday before you want to dip buy. It's not the pre-market volume estimate, because if you use pre-market volume estimate, if the intraday volume, it's going to trade 100 million, but you need to wait until the stock trades 100 million first before you dip buy. So that's a little bit different. Check the volume first, 100 million at least, before you buy. So the last point is this, the higher the stock price, the better. So the stock is $20, it's much better than the $5 if you try to dip buy. And of course, the lower the price, that means it requires more volume. So $20 drops to $10 dip buy, it's going to be much profitable than $5 drops to 2.5. But for them to stay equal odds, the lower priced ticker or stock needs to trade at least twice as much volume. Let's talk about the winning factors for dip buy strategies. First, the more volume, the better. So there's no cap for the volume. If it's trading 1 billion volume, 2 billion volume, then there's much bigger odds for the stock to go into bounce. The second is the faster the drop, the better odds for it to dip buy. If you encounter that the stock is slowly fading from the top, if it's taking 3 hours, 4 hours to fade, then there's no dip buy opportunity. You need the 30 minutes to 1 hour fast drops, not including the hold time, which is 10 to 15 minutes, but the actual trading time, if it's 30 minutes to 1 hour, drops 50%, then that's a great situation to dip buy. Number 3, if the stock has previous high liquidity support, if the stock trades 200 million as a consolidation in the previous day, and it does have a solid support right at the 50% level, then that's something you want to dip buy using that consolidation as your risk. Number 4, it's pretty much the same thing, goes to number 3, is if it drops the same percentage level and right at the chart, and that 50% mark has a support at the right time, just at the right level, then it's going to increase your winning percentage. And the last point is if the support are multi-layer, if the chart is stacking support, that will be the best scenario for you to dip buy, because for the stock to drop under a multi-layer support is going to be very difficult. If it has more than 2 layers of support, I have never seen a stock went through multi-layer support without a bounce. So let's talk about the average return for the dip buy. The average return for the dip buy is around 50% to 100%. This pattern is it does have a really good profitability, and if you have to time it really well, because there is some catching to it. So first of all, this is not a gap up short or bound short. Typically, a bound short and a gap up short, you only need maybe 1 or 2 entries, then you have a set risk, max loss, and you're ready to go. But for multi-day runners, you have to break your entry into multiple parts, especially with the situation without support. Personally, for me, I have tried many methods. I think 4 to 5 tries will be good enough, especially on our entries. So first 1 or 2, 3 entries can be sizing into weaknesses when the stock drops under 50% from the top. Then the rest of 2 entries can be used to spot if the stock is forming double support or triple support, or it's bouncing from the bottom from the weaknesses. That's where you want to size in to get average it up and getting full size and to get a decent entry. And without support, 4 to 5 entries. With support, 2 to 3 entries. Then number 4 is the risk is difficult to control, especially without support. That's why you need 4 to 5 entries, because you need to get the right idea and the right risk into it. So you have to wait until the chart develops, until it forms either a support or it's bouncing from the support. That's where you can start manage your risk from there. So play along as you go if there's no support. Number 5 is whenever you spot a support or consolidations at the 50% or 60% mark, you want to dip by 10% above the support. For example, if the support is around $4 and 10% above that, you want to dip by around 4.4. Number 6 is this dip buy pattern typically involves with a much bigger liquidity. So for this specific pattern, you can size in tons of size before you break the pattern. And of course, the bigger the support, the better for you to size in as well. So for this specific pattern, I have a couple examples to show you. So let's get into it. All right, let's talk about the buying strategies. This dip buying strategies I personally be using for the same thing goes to number 3, is if it drops the same percentage level and right at the chart, and that 50% mark has a support. All right, let's get into the risk management, and I want to mainly focus on this sector because it doesn't really matter how good your winning pattern is, or how high the winning percentage is. Sometimes you will run into patterns, the pattern will not work, even though it has 99% winning percentage. You got that 1%, the stock will likely forces you to take your max loss. If you don't take your max loss and stock breaks through the consolidation, you flips double, then you're down 100%. And I do see a lot of students sizing in way too much, and once the stock breaks their max risk, they're thinking they're taking too much losses, so they rather wait for the stock to come back. Then all of a sudden, next thing you know, they blow up their account. So risk management is your fundamental skill. You have to practice risk management first before you practice patterns. You need to know a solid risk management to protect yourself from blowing up, from ending your trading career, As I said in the previous slides, the longer you survive in the market, the better you will get. So it only takes time either for you to build that screen time. If you blow up your account, you're not gonna even build your screen time. You're probably paper trading, and paper trading is not going to do good for you because it will left with you a lot of FOMO. So for risk management, this sector is very important. Without risk management, pattern means nothing. I've personally ran into several situations that the pattern has a great winning percentage, but it broke through really heavy resistance, almost 300 million at $10. So that's 3 billion resistance. Back in 2020, that type of resistance is unbreakable. So he broke through that, it broke my mind, but I still cut my losses. And when you run into that type of situations, you have to size down or pretty much cut at your maxed risk. I do see a lot of people just ride it all the way along to the top, then down huge after they got squeezed. On the third point is I will give you a few methods of how you can really choose what fits the best for you. There's several methods of how to really manage your risk. There's aggressive method, there's passive method. If you only want to make consistent profit and you do not want to take much bigger risk, then there's a way for you to do that as well. So there's also, you have to master different risk management in different account size. A $1 million account, risk management is much different compared to 30K account. Sometimes you're risking percentages on a lower account size, then you are going to risk a certain amount of dollar in a bigger account size. So that's very important of how to really manage your risk in different account size. Then I'm going to talk about how much money you will need for day trading specifically, because typically when you want to day trade, you don't really need that much capital. You don't really need, if you have $1 million sitting on the side and you don't want to put $1 million for the day trading specifically, especially for intraday pattern, because in day trading sector, you don't really need that much capital. And the second one is, I will talk about how much you can size it into one ticker, depending on the volume, depending on the flow size as well. Then there's max dollar you can size it into one ticker, typically on the intraday pattern as well. So all those three has its own, I would say, type of situations that you will run into your trading career. Make sure to pay attention to this risk management, because this could protect you from blowing up your account and forces you to make much less mistakes than me at the beginning of my career, and it will save you a lot of money. All right, so let's talk about the risk to price flow and market cap level. First of all, your money becomes more important when the market cap is really low. As I said in the very beginning, that you want to make a ticker go up 100%, you want to look at their market cap. If the market cap is only 10 million, then you only need 10 million for the stock to go up 100%, right? But if the market cap is 100 million, then you will need another 100 million for the stock to go up 100%. So the more expensive the market cap is, more it's harder for all that money to pour in one day to make the stock to go up 100%. And whenever you have 300K shorting positions on a 2 million market cap ticker, then you are basically equal more than 10% of the market cap. Then your money becomes relatively important in that stock. And whenever you want to cover your positions, you are making the stock go up, and your execution will be really bad. So if your account is over 500K and you're shorting something that market cap is really low, make sure it stays under 1% of the volume, 1% of the float, and do not exceed over 10% of the market cap. If you exceed that, then either you want to top tick, you position yourself at the very top of the stock, or you're going to take a loss. So I have personally experienced that many times, and do not exceed that 1% percentages for the volume and the float. And also, if you're sizing way too much and you're comparing your size with the float, let's say you want to size in 50K shares at 1 million float. Well, you're 5% of the float, and you are going to affect the stock price as well whenever you short or whenever you cover your shares. As I said, if you don't position yourself really well, or top ticket ticker, then you are leaving yourself in a really dangerous situations. So your shares becomes much more important when the float is really low. You have to position yourself at a very good place. If you don't, then you are likely to take a loss. Another one is the lower the stock price, it means the more risk you are taking. And for example, let's say you are shorting a $2 stock. This is the reason why I don't like to short a stock that's under 3, because it involves much more risk. Whenever you are shorting a ticker that's $20 and $30, that means typically whenever you run into this type of situations, the stock has already ran up 3-5 days. And it's probably up 1,000%, 2,000%. As the stock is gaining that much percentages, the market cap is getting more expensive. As I said, the more expensive the market cap is, the harder for the stock to go up. Then if you are shorting around $20, that means, first of all, you need much more money for the stock to go up. So the stock is unlikely to push up for just like a lower dollar stock. That's number one advantage if you short more expensive stocks. Number two is it's much easier to manage your risk. It's because if you short 10K at $20, you don't have to borrow. Basically, you are taking a 200K positions, correct? Then if you're shorting a $3 stock, you have to take, up to 70K shares to short 200K positions. If the stock goes up $1, you are down 70K. But if the stock goes up $2-3 on $20 stocks, you're only down 20K to 30K. So that's why more expensive stocks do have advantages for shorting. And for the stocks that's under $3, it's very difficult to manage your risk. That's number one. Number two, you need to borrow much more shares, and more shares equal more borrow fees, and you want to avoid that as well. And if the stock is under $1, using any type of short pattern does not work at all. The only pattern that maybe it's doable for going for long strategies is you want to dip buy into potential multi-day runner breakouts, and if the support is over 400 or 500 million on 70 cents, then it is okay to buy. But any other situations under $1 stock is not really tradable at all. All right, let's look at momentum shift. To be able to identify a momentum shift, a lot of people were being very confused about how do I really justify if the stock is actually shifting its momentum. There's two ways, a couple ways to identify that. First of all is dollar block plus double intraday top. So 2 different day with 3-hour consolidations, and consolidations is 5 to 10% range from each other. So, and plus the dollar block for multi-day runners for their market cap and flow zone. So number 2. Number 3 is the stock performs first red day after 3-day at least consecutive green day candles. 4 is the volume comparison. The volume needs to be at least 2 to 1. So yesterday if it trades 100 million volume, then today only trades 50 million volume. That's a sign of a stock is losing its momentum. So that's number 4. Number 5 is if the stock breaks through massive support slowly, that's also a sign of stock is losing its momentum. Here is one thing I want to add for volume comparison. This is a little bit one of the, I would say, very detailed one you have to pay attention to is if the volume trades 100 million yesterday, right? And today the stock gaps up, let's say traded 100 million shares at $10. Stock gaps up to 15. Then we traded another 70 million shares at 15. So whenever you're looking at the volume comparison to see, okay, well, 70 million shares is actually less than 100 million, right? But if you take a look at how much dollars being traded, then it's a different story. 100 million times 10, it's 1 billion. And dollar traded on the first day. But you're looking at 70 million shares traded at $15. you're looking at 1 billion plus, a little bit over 1 billion. So in terms of volume, it actually decreased, but dollar-wise, the amount of dollar being traded, it actually didn't decrease, it actually increased. That means the stock's still a green day. So that means the stock is still going up. The volume's going down because price got more expensive, but the amount of dollar didn't really fade. So that's one of the things you have to pay a close attention to. But if the dollar is trading around the same range, let's say traded 100 million at 10, and next day traded 70 million shares at 10, that means the dollar is also decreasing. So not just the volume wise, also pay attention to how much dollar is being traded in the following day to see if it actually decreased compared to the first green day. Number 6 is if the stock pulls more than 20%, this is a low winning percentage because stocks can pull 20% to trap shorts and to spike again or to reverse it. So pulling 20% in the pre-market typically doesn't really work that well, especially on the really stubborn ones. The longer the multi-day runner goes up, the more stubborn the stock is unlikely to come back, unless they're hitting with a massive wall with a resistance and they tried several times that stock will not break through that level, then they will start to go down. So pulling more than 20% is during the market hours or in the pre-market, typically both have really low winning percentages. But remember that if the stock is running only 2 to 3 days and it's pulling 20%, it does have higher winning percentage compared to stock pulls 20% if it's been running for a month. Some tickers you will see that's been multi-day runners for almost 1-2 months, and then will take 1 day to drop. But some multi-day runners only take 2-3 days to run up, then take 1 day to drop. So 20% is much more effective on the tickers that's only been running a very short amount of time. All right, next, let's take a look at shorting into the first red day. First red day winning percentage is about 70%. Frequency happens anywhere between 30 to 50%. Also works on multi-day runner as well. So the criteria, first of all, market cap is under 200 million. The initial flow is under 50 million. And it needs at least 3-day extension, so 3 consecutive green candles. It normally takes weeks to form multi-day runners. Sometimes the longest I've seen took 2 to 3 months to form. And it trades bigger volumes, and then eventually it leads to a massive parabolic, then we come back down. Then the minimum extensions for first red day has to be 300% for 3 to 4 green candles. For 2 green candles has to be over 1000%, which I mentioned in the previous slides. So remember that. The next daily candle has to be greater volume than the previous day candle volume. And also you have to take account into how much dollar is being traded in the next day. Even though the volume is decreasing, but the amount of dollars being traded more, it still counts as a green candle. Also, it counts as the stock is still gaining liquidities and potentially moving up again. And also, there has to be no neutralized area set between the roundup days. Let's say on the first green day, you ran 300%. The second day, you dropped 5%. Third green day is running up again. So in the middle, that red candle 5%, it destroys its first red day. So if you see those red candles, those tickers does not qualify as first green day no more, because it has to be green, 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 green in 3 to 4 days. Cannot be green, red, green, red, green, red. It doesn't really matter how far they spike. Couple thousand% if they have the red candle in the middle, does not qualify as first red day anymore. So here are some of the first red day winning percentage factors. The first point is the average return is about 25% to 75% for first red day. For the 75% mark, you kind of have to hold for a couple months. This is really up to how much the stock flow is. If the stock flow is way too small, that means the borrow is going to be expensive. Overnight is going to be even more expensive. So holding all the way till 2 months, it's not really worth it. But for higher float, like DWAC, CEI, those are costing maybe 1 cent or 2 cents to borrow the tickers, then don't have to worry about it. You can hold as long as you want to get that 75% return. For intraday level, it stays between maximum 26% from the statistics I've been tracking. And also, by shorting to the first red day, you can use the pre-market prediction plus dollar block prediction to get your entry, and your risk can be as your entry. So your risk can be as good as 0 if you practice it good enough. And also if you have a big awareness about the dollar block and using them correctly on the different market cap zones and float. And the third one is the typical risk for the first red day has to be staying within 7 to 15%, no more than 15%. Because if you're looking at 26% intraday reward, then if you're risking 15%, right? If you take a loss on that, that means re-enter again, that you are only going to come up positive 11%. So if you screw up 2 times in a row, then you are not going to make any money back. So that's why I limit a trade. I can only do 2 tryouts. If I failed on the 2 tryouts, you cannot enter the pattern again. So move on to the next one. The last one is, and today, then the minimum extensions for first red day has to be 300% for 3 to 4 green candles. For 2 green candles has to be over 1000%, which I mentioned in the previous slides. So remember that. The next daily candle has to be greater volume than the previous day candle volume. And also you have to take account into how much dollars being traded in the next day. Even though the volume is decreasing, but the amount of dollars being traded more, it still counts as a green candle. Also, it counts as the stock is still gaining liquidities and potentially moving up again. And also, there has to be no neutralized area set between the roundup days. Let's say on the first green day, you ran 300%. The second day, you dropped 5%. Third green day is running up again. So in the middle, that red candle 5%, it destroys its first red day. So if you see those red candles, those tickers does not qualify as first green day no more, because it has to be green, 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 green in 3 to 4 days. Cannot be green, red, green, red, green, red. It doesn't really matter how far they spike. A couple thousand% if they have the red candle in the middle, does not qualify as first red day anymore. So here are some of the first red day winning percentage factors. The first point is the average return is about 25% to 75% for first red day. For the 75% mark, you kind of have to hold for a couple months. This is really up to how much the stock flow is. If the stock flow is way too small, that means the borrow is going to be expensive. Overnight is going to be even more expensive. So holding all the way till 2 months, it's not really worth it. But for higher float, like DWAC, CEI, those are costing maybe 1 cent or 2 cents to borrow the tickers. Then don't have to worry about it. You can hold as long as you want to get that 75% return. For intraday level, it stays between maximum 26% from the statistics I've been tracking. And also, by shorting to the first red day, you can use the pre-market prediction plus dollar block prediction to get your entry, and your risk can be as your entry. So your risk can be as good as 0 if you practice it good enough. And also if you have a big awareness about the dollar block and using them correctly on the different market cap zones and float. And the third one is the typical risk for the first red day has to be staying within 7 to 15%, no more than 15%. Because if you're looking at 26% intraday reward, then if you're risking 15%, right? If you take a loss on that, that means re-enter again, that you are only going to come up positive 11%. So if you screw up 2 times in a row, then you are not going to make any money back. So that's why I limit a trade. I can only do 2 tryouts. If I failed on the 2 tryouts, you cannot enter the pattern again. So move on to the next one. The last one is this pattern doesn't really happen that often, so it often takes a lot of practices to calculate first red day, dollar block for different market cap zones, and what's your risk. What if the first red day pulls way too fast and way too hard? What should I do depending on the chart level and support resistance level? So it takes a lot of practices, and make sure always track down first red day and multi-day runners. Those tickers will be your big, I would say, big play compared to overshooting gap down or bounce short, gap up short. They trade tons of volume. You can sizing a lot, and also they do have the biggest reward compared to all patterns.
quickly. There are probably two trades we'll look at today, both rubber bands. And we'll go from there. And then we've got playbook in a little bit. Somebody had emailed in Greg V, the OKLO rubber band. Thanks for mentioning that. We can start with that one. And then we'll do the PLTR rubber band from today as well. I hope yesterday was good. Reading the tape was good yesterday. I'm happy to help with anything else. If there's ever anything you guys want to do or look at, let me know. I thought that was pretty good yesterday to be able to look at that one. And obviously the stock traded sort of in a way that we talked about after that, which was really good. And hopefully it provided people the opportunity to capitalize on it a little bit. Go to Oklo. Get the date right. Today's the 5th, and I think this is at like 10:15 or something like that. Exactly where it was. Let's see. Or we could look at the RGTI as well, but 10:45. Let's try that. Yep. Share my screen. Let's see, Zoom. We'll get to the questions in just a second. Let's see. Okay, chat. Explain some details which should be overlooked in details while reading the tape. Details which should be overlooked in details while reading the tape. Roman, can you rephrase that question? I'm not quite sure what that means. SMCI was pretty awesome, actually. Yeah. Okay. These are all really good questions. But let's just get into it and you'll find out what we're doing here. Okay. Oklo rubber band. So anyway, on a higher time frame, and I think everybody you're looking at the screen, right? Is that right? You're seeing Oklo? Yeah, all right, great. So here's the whole thing, like when you're in an environment like we're in, do you expect the market to really run away in this sort of tape? Not at all. Do you expect the individual names to run away? Not really. So all we're going to do is kind of sit there and wait and focus on hold on one second, stop share. Pause this. All you're going to do is sit there and kind of wait and reset and kind of look for things to get extended. And the reason why I'm switching it is because like this is an all-time high break, right? Where I guess the all-time high break is just a little bit higher, but here we go. Maybe not all-time high break, but it's a break, right? Provide some examples, like look for big size of executed trades. Okay, So on a day like today, you're gonna think that there are gonna be a lot of good rubber bands, actually. The key is going to be not jumping in and predicting that the rubber band's gonna be there. And the reason is because you're going to want to see the price action change. If you go in and you're like, oh, it's a rubber band, it is, but it just technically is breaking out of the range. So you're gonna want to wait and see a really distinct change occur. But in these sort of tapes, what I always view happening is like, you see that size at 49.40, right? That should take it higher. What I always view is happening is there's just stuff getting chased in either direction. And then when it starts to evaporate, it's going to start to evaporate really, really quickly, if that makes sense. I just don't want to predict it. I actually want to just sit there and wait and wait and wait and wait and wait. And a lot of times it's like 4 or 5 minutes later than I expect it to be. But that's one of the things that I really want to ground myself in is if I'm going to execute this trade, I'm going to execute it with a lot of precision. And if I'm taking a rubber band or if I'm taking a trade like that, I'm really watching the bid and the offer and the interplay between the two. It might show up that there's size somewhere. It might show up that there's weird prints or something like that. But I don't know that, and predicting it makes it really difficult. So I think if I just kind of go in with an open mind, like you see a little bit of that change. And if that was a real change where we saw that drop out below 49.5, would they rebid that quickly? Would the bidder step right in? No, they wouldn't. Like if that was a real change, you wouldn't see this. And so I can't sit there and go, oh, well, that was the change. Look how different that tape was. It was, but I'm really always interested in what happens and then the follow through after it. So now we're getting really extended fast, and this is good for us in a rubber band style trade. Now, let's keep a close eye on this stuff and see. Is there a reason why a majority of the stocks are now hard to borrow? I don't know the answer to that question. I don't know, David. Now that we're getting extended, yeah, I think it depends entirely on the broker. Now that we're getting extended, now my eyes are much more focused on just the bid than the offer because, we just extended another 50 cents. And could we extend a little bit further? Yes, absolutely. But I really do want to kind of wait and see to see if there's a distinct change in the tape. The worst thing you can do on a rubber band is get involved too early, get involved without a real reason to get involved, and then all of a sudden you're playing a game of kind of predicting that the trade's there versus actually having a trade that shows up for you. If that makes sense. You really want to wait and allow yourself the opportunity to take advantage of it. So I'm just sitting here watching. I haven't seen anything change. We've seen that like magnitude of the up move. And the reality is there's always two elements to a rubber band. There's the overextension component, and then there's the mean reversion component. And I view those as two totally different things. The overextension component is the snapback component, and then the mean reversion component is the bigger one.
Dad says do a little like
Nope, I understand what it says, kiddo. You don't have to do all of it today, but I do need you to do it. Okay, but I need you to do a little bit, okay?
Did a little bit.
I understand. I need you.
Okay.
Excuse me for 1 second. So what was the question that you wrote down? Sorry about that. Okay. So now if I'm sitting here and watching this, I'm waiting. Then what I want to see here is, because there isn't a distinct and noticeable change, I want to see, usually it will make one more run higher and then fail. So we'll speed it up just a little bit because kind of need to here, but what I'm really paying attention to is on the bid. And if you want to get it, if you really want to learn about reading the tape, the number one thing that I say is just read the tape. That's it. Like, just start reading the tape. Like, and I'll go through it. You ready? Okay. Now we're at a really interesting play. Because up to this point, like, we've seen a sustained buyer, right? And what's been super interesting about all this stuff is every time it dips out, what happens? Like, you see the dip out here, they rebid. You see kind of the sustained buying and then the acceleration. So all we're waiting for is that acceleration to not lead to follow through. And we're going to see that bidder drop one time. And when that bidder drops, that's going to be a distinct and noticeable difference. I don't know if it's going to show up with giant size or there's going to be some mega indication here, but it's just something that is going to happen, that it'll look very different. And it almost always does. Sometimes it does, sometimes it doesn't, but I think it almost always looks very, very different. And then even more, you want to see it look different and then kind of have a follow through moment after that too, which is really important as well. I find that seller at 5160 really interesting. Anybody else notice that can't lift? And there's bids at 5150. And that didn't take it higher either. Seller at 5130 now. If this 5120 drops, now you could probably short it against the highs. I mean, if you do get stopped out, that's okay. You can reset, but you notice how there's that seller at 60 and then all of a sudden it's trying to drop a little bit. So let's assume we're risking about 50 cents off the highs. Well, we would need to get about 50 cents down for us to get our first cover. And this is what happens in rubber bands sometimes, is sometimes they just work on the first attempt and other times they stop you out. But you'll notice I'm not worried about it in either way. White prints. I mean, white prints are occurring between the bid and the offer. Like, they're prints that are midpoint. Their relevance in this situation, I mean, their relevance in this situation is really unique because you can see obviously how many are happening, but that's just the way that you kind of expect this to trade when it's trading this much volume. I mean, look at that massive volume increase that's occurred, right? So there's a ton of just participation in general. And so typically when you get a big fast move in either direction, it's just there's all sorts of participation occurring, and they're trying to get orders in and filled, and so they'll do it any way they need to. So whether it's on the bid or on the offer or midpoint, it's fine. We have a lot of different keys that we'll use on the desk, and I think they're all actually publicly available. But the midpoint tends to be a really popular one, and part of the reason why you midpoint is because you can midpoint hide. And so that's something. There you go. Thank you, whoever posted that. So yeah, that's a good thing. So instead of doing that, you guys can all post it, or you can ask the AI tool a lot of these questions. I always forget about that. Thank you very much for doing that. And it'll give you those reference points, which is really good. All right, so let's stay on this here. Okay. Now it's at this really interesting point where if this is going to actually break, it should break really quickly, shouldn't it? And this is the one element of this trade that I'm starting to get a little uncomfortable with, was that size. And you see how that size was pulled versus dropped. They didn't hit it all, I don't think. And so that makes me a little uncomfortable because it could easily rebid here and then go a little bit higher and then set up again. Now, is it worthwhile to stop out at any point before the highs? No, not really. Does it suck if you take it and, you know, then you take a rip? Yeah, that always sucks. But that's sort of the way that's sort of the way trading goes. What was interesting was that when that size was there and then it dropped, we haven't seen that size come in for a rebid either. So kind of want to wait and see here. Definitely go above the highs now. But the question is, if it goes above the highs, how long can it sustain above the highs? There's always this point in these trades when you're reading the tape that you're kind of caught in no man's land. And like, what would you put the probability of us getting stopped out above the high at? I mean, obviously it just happened, but there it's like 90%, right? But it's like, but it is very interesting because you can get stopped out above the high, and then all you're waiting for is this trade to really set up and like get a real good stuff candle, right? Yeah, and sometimes you will get a little spray, and so that's an appropriate thing to do, but you really want to see distinct and noticeable differences, right? And if it does fail, then you will just want to reshort. And look, you had size come in at that 60. Remember how important that 60 was? My eyes on the bid, and the reason why my eyes are on the bid is because they are firmly in control. The bidders are firmly in control of the price action. So I need to see the bidders drop, and if the bidders drop, that's where I can get involved. Bidders drop, rebid. Bidders drop, rebid. Bidders drop. Let's see if they can rebid. Well, they're not rebidding this time. They're there. Now the pattern has been it goes up and makes a new high, and it's not doing that right now. The fact that it's not doing that is something. Now you can short. Short against the high thing. That it's not doing that is something. Now you can short. Short against the high. $52.50 is your stop. Yep, that was different. And so did you notice how that bidder dropped? Right? And you might see the bidders try and rebid. That often happens in this. But the reality is this entire narrative should have flipped. And now all of that pressure from the buying should go to selling. And basically what was happening was there was an imbalance that was occurring with this buying, and now the selling's occurring. And so, you know, I'm not saying you go as aggressively down, but say this was a positive 8 tape or something like that on the way up, it should be about a -6 on the way down. It doesn't mean it should just like implode, but it means like on a pop like that, you should be able to see the seller walking it down. So my eyes flip entirely over to the offer from the bid. You know, I'm not putting my eyes there. I'm putting my eyes here now. And the reason being is because every time it steps up, I should see the sellers willing to kind of step it down. And if they can't, then that's going to be a problem, right? So this is that moment where I want to see the sellers just show that they are totally in control. And walk it right back down. You can notice that 9 EMA also caught. And if it gets below there, then I'm feeling much more confident in this trade. Would anybody like to go back and look through that entire interplay again, or do you want to see the way the trade plays out? You want to go back? Yeah, let's take a look. Okay, let's go take a look. Yeah, 2 minutes playbook meeting. Thank you. So we'll just do this right here. My eyes are on the bid. My eyes are on the bid. And I'm looking for that really distinct and obvious moment. Free bid. Can't get above 30. Try and get above 30. There it is. Right? Everybody see that? Everybody see this? Right? There it is. There it is. Right? Everybody see that? You can see how it's like pressing, pressing, pressing. Can't get higher, and then it's just like, That's a pivotal moment in this trade. That's the beginning of this entire thing flipping. Also near the ATR, that's great. Good. A lot of times these are algorithmically driven on a day like today. So when it is like a All right, testing. Can everybody hear? All right, looks like people can hear. So just want to give everybody a heads up. I am out technically this week. My father-in-law, who is suffering from Lewy body dementia, passed last week, and so I'm out helping to handle his affairs this week. I will be running the meeting today and tomorrow for reading the tape, but Garrett offered to step in and Justin stepped in, and I think we're going to try and get Ryan to step in and do some of the trader development stuff for the rest of it. Thank you very much. Thank you for everybody. That said, I'm super excited to do reading the tape. It kind of gives me something that I've been looking forward to all week. I'll let can people just post in some of the things that they'd like to potentially study for reading the tape? I'm very much an open book. You know, we used to do this. Thank you so much for all your thoughts and prayers and condolences and everything. My instinct was Tesla. But I'm happy to do kind of anything else. Qs, DAL on Friday. You know, there are a lot of different thoughts here. On these, let's see, DJT, DKNG, fashionably late. I mean, I like the Tesla today because it fits with what we've been talking about so much. I mean, the RGTI as well on the essentially the oversold bounce, and what those turn into, like from a setup perspective. But I really like Tesla today. If people are okay with it, if we have time, we can do RGTI as well. I think that those are really important to make sure we're getting right. And they fit into what we've been doing, what we've been talking about lately. So let's stick with that. Okay. And you guys have to remind me, I need to get Trading Sim a testimonial. They've been asking me for it for like 2 weeks about, hey, do you guys use it and all that stuff? And I'm like, sorry guys, I've been a little busy. But I'll get it for them and it'll be good. So Tesla, I'm just pulling charts up right now, so that's what's taking so long. Tesla, why I find this so fascinating and why I think it's such a great one to study. And this is the sort of stuff that we would study. And you know, the idea of reading the tape for us and why we're doing this reading the tape lesson is twofold. First of all, yeah, I'm getting ready to share the screen, so hold on. First of all, the reason why we study reading the tape is because we find that in the right moments, it offers a tremendous amount of edge. The challenge that a lot of people have is they read the tape and stuff that doesn't matter, and it's not the right not the right moment to be reading the tape. And if you get caught doing that, what actually winds up happening is you're doing the right thing at the wrong time, right? And so by doing the right thing at the wrong time, the right thing meaning reading the tape at the wrong time, are you adding to your expected value in the trade or actually decreasing your expected value in the trade if you're doing the right thing at the wrong time? Yeah, you're massively decreasing your expected value in the trade, which is a tough thing because when you think about it, you can do that without really meaning to. And you can do it with the best of intentions. But the key here is making sure you're doing it the right way at the right time. So Tesla was really interesting because what was the setup in Tesla? Well, first of all, what's the market environment that we're in? What's the market environment that we're in? From what we talked about. High weakness, low strength. So people are saying that, but I'm looking at it from the perspective that maybe from the last little bit, we're seeing more weakness, but the size of the moves that are getting retraced, and remember, that's a big part of all of this, is how much of these moves are getting retraced. And if I put that in the context, how much of these moves are getting retraced? You know, we get a move in one direction. How much of these moves are getting retraced? So are we getting sizable moves to the upside? Where are the more sizable moves coming over the last few days? Yeah, they're coming to the downside. That's right. So what we're actually seeing is, and that's a little quick process to identify what sort of narrative are we in and the overall theme of the market. And I would argue the overall theme of the market is low strength, high weakness. Does that make sense? Everybody on the same page? Low strength, high weakness. Okay, great. So low strength, high weakness means that if you get really strong up moves into levels, potential areas of resistance, say 5, 10 in Qs, what should happen at those levels? We should have fades, right? They should be really, really good fade trades. Essentially, we should be downtrending, right? So when you're in a low strength, high weakness environment, all of a sudden we're thinking, okay, I'm probably looking for shorts. I'm potentially looking for momentum shorts, but especially if I get gaps up and presses into key levels, that's like the highest probability short. The momentum shorts are like a little bit lower probability, right? And then to take it a step further, are you going to want to short the strongest stocks, the weakest stocks, or stocks that are in range? Put them in that order. Strongest, weakest, or in range. You're going to want to start with the weakest, and then you're going to want to go to the ones that are in range, and then you want to stay away from the ones that are strong, because those pockets of strength can be ridiculously strong. So you want to start with the weakest, and then you want to go to the ones that are in range, and then you want to go to the ones that are strong, right? So Tesla, what is it? Strong, weak, in range. It's just in range. It's just in range. The range is 420 roughly, 420 to basically 380. And you could argue maybe it's a little tighter than that, like 385 to 420, but like it's in range. It's straight up in range. And how quickly did we go from the low of the range to the high of the range? Like basically in one day, right? We went from the low of the range at 380 yesterday morning on the open to the high of the range at 420 today, right after the open. So you get this combination of factors. And this is where people say I'm having a tough time trading the market. That is true. But if you're more specific a lot of times you're sidestepping those difficulties and you're actually keying in on the best trades for you. So if I tell you that you have something that is trending down in an overall low strength, high weakness environment, every up move is getting retraced more than 100%, essentially, right? Is everybody comfortable with that? Okay, great. Then we've got a stock that's in range that quickly trades from the low end of the range to the high end of the range, right? What would you expect to happen in that stock? Is it likely to break out or is it likely to fade? It's likely to fade, yes. And so we're going to go into reading the tape when it gets to that level can be this exceptionally good skill that you have, right? It can be this amazing, amazing skill because you're applying it at the right time in the right way. So this is just a basic reading the tape principle of something making a fast move into a key area. And so let's watch the tape now. Now that we've talked through all this, let's actually watch the tape. Are you ready? Okay, we're going to 1x it. We'll go 3x on the open, and then we'll go to 1x. And again, it's going to crash on me for no reason. All right. I don't know why every time I do the next gen, it like freezes for me. Let me stop sharing and see if I can get it set. Hold on. Maybe it's something with my computer, but does that happen with anybody else right now? Yeah, put that in my testimonial. That's a good one, John. I like that. Let's see. Let's see if I can close anything else that allows me to. Shouldn't matter. Just resetting. All right. Let's try this. Read up a bunch. Maybe I need to try it in a different browser. Okay. All right. Let's try it now. Oh boy. I don't like technology issues. They're the worst. Sure. We're back up and running. Hopefully. Just get so lucky that we always think that we're always used to things working so well now. Here we go. Okay. So we'll go to 3x because it doesn't matter where it is at 415. Does 415 matter at all? Does the 415 price matter really at all? No. And so it's not really even a trade. So even if we're reading the tape right now, are we doing ourselves a service or a disservice by reading the tape right at 415 right on the open? A complete disservice, right? It means nothing to us. But we can use the chart and the bars to tell us. So you get this really good down through open, right? You can watch it and you can say, if this closes up, then I'll really look for something special. But, you know, you saw it fade already, so it's not really that great of a trade. You get that second leg and you're like, okay, now I can probably take it. We're up through 415, stop 412.5. I'm risking 2 points. But the reality is I'm thinking this could go to 420. Is it a worthwhile trade? No, not at all, right? And then even there it would stop you out and then maybe turn into like a gap give and go, right? You could argue this is a gap give and go now. But again, I'm not focused on the tape because I don't think that this is really great risk reward. It's a decent probability that it goes to 420, but it's not great risk reward, even if I get it. It's like a 2-to-1. So a 2-to-1, even at like a 65% probability, is not like a great opportunity. I'd rather get something that I can really risk a little bit better on. Does that make sense? So that's why I'm not really worried about reading the tape when it's right there. Anybody have any questions about that? I could read the tape off the open. We could really focus in on it, but the reality is it's just not. I call spots like this like an almost land, where it's like, or a mirage spot, because like you think it could be an area of importance, but the reality is it's not at all. It's like, you know, $4 or $5 away from an area of importance. And then your risk reward tends to get completely skewed, because if I'm thinking, you know, the traders are actually doing this, like the bigger participants are in the market, it's just something that I need to see 420. I can't really participate here. Justin, this is a good question. I'm not understanding that scalp not being a good value at 2 to 1 at 60% probability. Okay. So I'm glad somebody asked this question. I didn't expect this question to come up, but I'm glad somebody asked it. Let's talk through this. If I think I can take a 2 to 1 at 60% probability, or I can take a 4 to 1 at 70% probability if it gets into that level at 420, which one am I going to take? Absolutely, right? And so me sitting there and saying, okay, it's probably a 2 to 1 at 60% probability, it doesn't mean I can't take it. But if my bet sizing, and these are the two things that we're going to focus on so much on the desk this year. One is, well, entries and exits are going to be so important for us, and we'll drill those so much more in this meeting and any other meeting. The second thing, and then collaboration, which we're making some big changes, and that'll come. And then really quick update, you'll get some cheat sheets from Rose is going to send at least one out this week, so I'm excited about that. And then maybe another one later, we'll see. But so we've got a lot of good things cooking right now. But these questions are really valid questions because they're so important. If I am taking the 2 to 1 at 60% and I'm risking 10% of my stop or 5% of my stop or whatever, mentally, am I going to be in the spot to probably be able to take the 4 to 1 at 420 or at a failure at 420? Or is there a chance that I'm going to be burnt out? So the reality of the situation is you could take that. You could take that, right? But the emotional capital, and Lindy put that perfectly, the emotional capital of taking this trade at a 2 to 1 or taking a higher probability trade with the potential to actually fade. You know, Tesla's gone from 420 to 380 a bunch of times. Is there a chance it breaks out? Yeah. Is there a chance it breaks out on this news catalyst? Sure. But I would rather wait and look for a turn at 420 or above than try and fight for 415 to 420. If I was in from 380 and then caught that news catalyst, like totally different story, right? If I'm in for much better prices and trading it up to 420, like, you know, I might think that. But I would expect that there's going to be a decent amount of selling at 420. Why? Because it just went up 40 points. It went up 10% in a day and a half or a day and a quarter off of a headline, right? So am I thinking people might be taking profits there? Yeah. So it's really coming down to managing yourself and your risk allocation. And risk allocation is just as much about emotional capital as it is with your actual physical capital. This is a problem so many people run into early on in their trading career, and it's one of the things that holds people back for so long is you see a 2 to 1 at 60% and you're like, I got to take it. And you're not really thinking about the trade in its entirety of where it's actually a really good trade. And that boils into your bet sizing, it boils into your execution, and everything else. So just, Justin, I'm glad you asked that question. It really helped everything. All right, let's get into the trade. First of all, I would have alerts or had alerts at, put alerts up at 418, 419, 420, 421, 422. 418, 419 trigger almost at exactly the same time, seconds apart from each other. So all of a sudden I'm paying attention to Tesla, right? Seeing it come up to 420, and this is where I'll slow the tape down a ton. So this is where finally, I actually have a reason to pay attention to Tesla. We're getting into 420. Do I expect that it's going to fail at 420 right away? As I'm setting the expectation for the trade? No, not at all. Especially not after this little opening range break, right? So I'm less aggressive already with the trade, with what I'm looking for in the tape. My eyes are very much focused on between the bid and the ask. And that selling at 65 is really interesting. And I notice it backs away, but then what do the buyers do? They come right back up. What do the sellers do? They're kind of fighting at that 65 to 70 area, right? 419.65 to 419.70. That's really where that fight is kind of being put up. So now the bidders step through there. Or they try and step through there, but they're not really able to step through there very cleanly, can they? Why is that interesting? It's very interesting to me because that's an area of contention before there being a real reason for it. Would I expect sellers at 420? Yeah. Would I expect sellers at 419.60? Not 65? Not really. And so I'm putting that in the back of my mind as a sort of a sticky price, if that makes sense. So size on the offer coming into 420, that makes more sense, right? Goes through 420 with a spray, that makes sense to me. Again, I'm now putting my eyes much more on the bid than I am on the offer. So notice my eyes have gone from 50-50, and I think you can see my cursor, so you can see kind of where it is, to my eyes on the bid. And the reason my eyes are on the bid is I really want to see if there's a buyer that just completely drops. And what that means is that buyer is getting overwhelmed by the sellers that are there. So I don't mean a single buyer that drops. What I'm really doing is, are the bidders going to be able to take this through, or are the sellers just going to walk it right down? And that's the way that I'm doing it. And you see how it dropped to 20 and then went up to 50 and then 60. And let's see, it drops 20. What happens? I can't short it right there on that because look how quick the rebid is. And this is 1x, right? I'm noticing there are sellers there at that 20, at 420. But notice how quickly the buyers are coming back in. So I don't have a change and I don't have a trade. I just have price action around 420, which is an area of importance, but I don't have anything clear there. The buyers are stepping in so much more aggressively now. And this is where my expectation for the trade changes, where I should be getting some acceleration above 420. So what happens if the buyers can't keep that acceleration? That's my first sign that maybe the sellers are going to overwhelm them. So now that I'm sitting here and watching this 422, 422.50. Okay, hold up. Did anybody else just notice that? We'll go back and watch it one more time because I think it's so important. Okay. Here's the acceleration, right? We're seeing this sort of speed up. 422.50. We'll go to half speed too. One more time. Okay, notice where we are. Okay, we're in that 420 battle, right? Watch the bid only. And this is so important to make sure you're understanding because we know we're hyper-focused on the tape. And we know we're cooling ourselves down by focusing on the tape. We're not getting more amped up. You might hear me getting more amped up, but that's just because I think the opportunity's there. But in reality, if I was trading this, I would actually get, somebody called it colder than a polar bear's toenail. That was the term they used, where you're just getting super focused and actually super cold. Like you're actually physically cooling yourself down. It's an Outkast lyric. I was wondering who that was from. Somebody used that and I was like, oh, that's pretty good. It was an older guy. I was like, that's pretty good. Okay, but watch the bid. Watch the bid. You're cooling yourself down here in this moment because you know it's potential for a big moment. First of all, as this trade is setting up, if this trade is setting up, right? Where do I think this could go?
If it fails 420, where do I think it should go? Remember, it's a move to the up into resistance. Where's the minimum it should go? If it actually fails. I think it should go at least low of day. So that puts it down to 411, something like that. So I'm thinking 10 points before I even get involved, or 9 points before I even get involved, right? A very fast move into resistance. Ultimately, it could make its way down to the lows, but at least it should fail, right? If it's going to hold higher, what's going to happen? We could see that quick failure, but remember NVIDIA from like a week ago when NVIDIA didn't even get below like 419, or the equivalent of 419 from a price perspective. It like dropped out, rebid instantly. I think it rebid off the like 9 EMA or VWAP or like whatever, right? Like that's going to be my test is the first. So this is all happening before the trade even sets up, and this is not reading the tape, but this is sort of the idea. I'm thinking this is a rubber band and it should go to VWAP and then it should go basically to low of day. I think this is a really solid B. Yes. Maybe a B plus, but definitely a solid B. Okay. So my risk allocation is accordingly. I think the opportunity is a B opportunity, and I think the trade, the way it's setting up, is a B plus with that scream into resistance. And then maybe it could turn into an A depending on the tape. But let's get back to the tape. Okay. Let's focus on the tape just for a second here. Because it drops out, and remember, we're half speed. Drops 420, immediately rebids 420. That's telling me it's not like a short right there, high of day stop. It's just not, right? It also tells me if I'm long, if I'm the person that took that trade long, I don't have a reason to sell it. Remember, this is half speed, so there's, this is slower than normal, but there's nothing I need to be doing right now. If I'm long or looking to short, there's nothing I need to be doing. My eyes are only on the bid. Now you see that acceleration. You see how we went from balance around 420 to a quick acceleration above, like to 422 almost? That's acceleration. Okay? That's different. Post it in the chat if you see a change. Okay, you see size at 422.30. Press to 422.30 above, and then there. That is a change. Did everybody see how we went to 422.30? That stacked offer wasn't it. That was a part of it, but the bid stepped through it, right? What should happen off a stacked offer if the bid step through it? What should happen? What should basically the next price be? 423 roughly, right? Yeah. It shouldn't drop out like that though. Watch this right here. Boom. Right? Now my eyes go directly to the offer. And I want to see, does the offer let it lift above 422.30 for any time, or are the sellers stepping in? Right? That is where my eyes go now. Mainly because I think that there was a failure that already occurred. So my eyes went from the bid to the offer because I think that there was potentially a failure that already occurred. Now I can be thinking at least it should go to 420, right? I'm risking maybe a point, and at least it can go to 420, and I'm watching the offer to see, does the offer step down? Does the offer step down? Does the offer step down? And did we see that? Now we see it. And I keep asking my question, is the offer in control? Are the sellers in control now? Are there sellers that bought at the low of the range that are so happy it's at the high of the range, they're just going to take their profits? That is such an important thing to understand when you get into these trades where when we're in a downtrending tape or a low strength, high weakness environment, and then that's coupled with a name that makes a very fast move from the low of the range to the high of the range. Every time it lifts, every time I see the offer lift, I'm in the back of my mind thinking, how quickly do they step back down? How quickly do they step back down? How quickly do they step back down? Because that's showing me the urgency on the part of the sellers. This is the first part where I'm like, maybe this could get a little dicey. So I'm watching the offer even more closely here. And do they care at all? A little bit, right? The bidders are trying, but does the offer care? You see how it goes up to 420.40, right? What was that price from earlier that we saw, the kind of sticky price? What was that price? 419.65, remember? Yep, John nailed it. 419.65. So that becomes my sort of line in the sand for a backside. If I wanted to wait and not even take this trade, that 419.65, that oddly sticky price, becomes my line in the sand. At this point, I'm thinking the seller should be in control. And so pops like this are scary, but are they reasons to exit my position? I don't think this is a Bella fade. I actually think it's more of a rubber band style. I think the Bella fade is if it ran up to 420 right on the open from like 412, and it didn't. It consolidated and then went. But that unusual buying was there. The risk is high of day. Yeah. And once in a while you get like a quick spray through high of day, and that's why I'm watching it so closely on the offer. But like sometimes that high of day spray is like nasty, but the best ones don't. That's why it's so important to get that size in at like 421.50 or something like that, because it can just evaporate, especially when it's a fast move into resistance. Does that make sense? Pretty much right after we saw that trade, that change, and then the sellers step in, that's where you get in. All right. Technically, you could say you get in after it takes out the low from the prior bars, which would be here. But I don't like that as much. I like kind of the more aggressive entry when you have the tape on your side. If it holds 420 for 5 minutes, what do I do? And that's a broad rule of thumb, but if it holds 420 for 5 minutes, yeah, I got to be out, right? If it tests down below 419.60 and does not follow through, what do I do? You got to kind of be really careful with your trade at that point. Okay? We'll let it play forward just for a minute. Oops, there we go. We'll let it play forward just for a minute, because you're looking for that spot, that moment where this turns into that was a good entry to this is a really good trade. And I'm watching the bid more now because I'm like, I wonder, are they going to spray it up and then it's going to fail, or is this going to go higher, or what's going to happen? But the fact that we've got this consolidation right here makes me think if we get a 4/1965 break, I've got now a backside that I can easily take, right? Distinct lower low, distinct lower high. Now I can take that trade. I think the tape is pretty neutral right now, honestly. I don't think it's a maybe -5, maybe, -5 mainly because you see the bidders can't really get it above 421. But that's a good question. Like if you were scoring the tape, what would you score it? I would say -5. I don't think it's really that negative, but the bidders just can't get the job done. Now I'm watching it. Okay, we try and get below that 420 again. 4/1965 can't. Now my eyes go back to the offer. Let's see if they lift it. That felt different. That feels like they're going to crack it this time. There's the crack. There's the short. Risk against, say, 421.50. See if the seller stepped through. Cover half at VWAP. Cover the other half at low a day. If I was going to swing this trade, if I wanted to, I could use like 417.50 as part of it. But I have to remind myself in this moment that this is a higher time frame setup driving this trade. I'm making the same scalps that we teach. What is 417? 417.20 is just this area of consolidation. It's like basically pre-market high and that area. But if it only pulls into 417 off of this, a lower time frame trade would be an area that's like not on a daily chart. Like 420 is clear on the daily chart and the hourly chart. A lower time frame trade would be just trading the price action of the day itself, right? A lower time frame trade would be that's a failure. It's coming into 417. I'm going to trade it off of that time frame because that's where the buyers are. That's where the sellers were previously, so I expect that to act as support. But now I'm thinking it can go further. Or 412, that would be a lower time frame. So thinking about the intraday participants only. Am I thinking this is only intraday participants in this name? Given the higher time frame setup? No. I'm thinking there are higher time frame participants in this name. So I want to allow them to pay for me. To pay for the trade for me, right? I want their profit taking to be my profits as well. So me covering the way I normally would in a scalp like this at 417 or something like that doesn't really put me in the right position, right? Because we did all the work to be in a higher time frame trade. And with that, we really want to let that work for us, okay? This is one of those examples where you're like, this is a higher time frame trade. The tape really did set up for me right up here with that really distinct failure, and then that walk down and through with the backside. So I can let that work for me. Who I expected to be there with those really exuberant buyers that were there and took it above 420, but those really steady sellers, I want to be there as long as those sellers are there, and I think they should at least take it to low of day. Does that make sense? So that's why I wouldn't take that opening range break trade, because this is such a better trade for me. Even taking the one at 419.65 and covering it at 415.60, right? That's 4 points and I'm risking 1. Roughly, or maybe 1.5, or maybe 2, right? So maybe I don't cover there and maybe I cover low of day, whatever it is, right? But the reality is this whole trade is kind of, that's the ad, and the real trade is kind of off that turn, and then I'm looking for low of day. I would expect that pre-market, you mean this pre-market consolidation here? That's a good question, Justin. Like this 412.50? Why would I be worried about that? Who do I expect to be involved? Higher time frame participants, right? People that were in at 380-ish and selling at 420-ish, right? Why would they care about this pre-market consolidation? They're just going to sell it. Historically, what happens is they at least stop the people out low of day, right? So they just will walk it down to low of day, at least. And then I can figure out what it is. So right here, where you're trailing your stop, 9 EMA. No, I wouldn't. I would actually trail my stop to like this 420.50 area now. So I'm probably like break even. Maybe I've covered my momentum lot that you would add on that little backside. And so I'm making a rubber band with a backside right there. Okay. And then my stop would probably be right around there. My stop typically should be above here, but the reality is I expect this trade, given the fast move into a key resistance area and the failure, to kind of come off pretty quick. All right. We'll wrap there. Thank you, everybody, for giving me this opportunity. I really love putting the combination of the opportunity with specific trades. And I feel like we did that today. The opportunity being a fast move from, kind of key support into key resistance in a downtrending tape or a low strength, high weakness market environment. So if you were to categorize this whole thing, it would be market environment is low strength, high weakness, right? Second, you get a very aggressive volatility and range setup. And you're not really sure if it's a breakout of range or a volatility in range. That's where you go to the tape. And then you get a rubber band trade with a backside. And then maybe even a fashionably late, depending on how it went. But I would think that the fashionably late will not occur because it's likely that this should evaporate so quickly below VWAP that the fashionably late wouldn't be a great entry. Okay? Thank you very much. We will continue to drive this market environment and other variables into the setups for the specific trades. One of the things I'm working on with our team is adding this into Scalp Radar. So those of you that have Scalp Radar already will be able to go in and study this context and learn more about it. A lot of it is what we talked about last week, and then some other information that we'll add on there. So those of you that have Scalp Radar, we think that's so important to make sure you're getting right because it's going to improve the probability of the trades in the trading courses. So that's a big priority for me to make sure. So the cheat sheet from Rose will be the breaking news cheat sheet. That should come. All right. Let's get going. I hope everybody enjoyed the cheat sheet. I think it went out, if I'm not mistaken. The breaking news cheat sheet, I think it went out. Just loading up. So today we can, obviously we can look at a lot of different things. Let's gather some ideas as to what people would like to look at from today. Breaking news cheat sheet should have been emailed to everyone. It should be in your email. If it wasn't in your email, double check your email. See on the break of 77. It's not a bad one. Like with I like the opening range break in C actually. quite a lot. That was kind of one of the three that I was thinking about. MU on the gap and run, I like, but I don't like that as much as C. C fits the narrative. Let's stick with C, okay? MU is a good one, but let's stick with C, okay? I like C, not on the break of 77, but on the opening range break, right? So a couple of house cleaning things, right? I didn't get the cheat sheet. Okay, if you have not gotten the cheat sheet, okay, it looks like a bunch of people didn't get the cheat sheet. Okay, all right. So I'm gonna follow up with Rose and let people know that a lot of people did not get the cheat sheet. Sorry, I thought it went out. Got an email that they were coming, but not the actual cheat sheet. I'll put screens up in just a second. Okay, some people received it. Okay, John, can you confirm you received the cheat sheet, or did you just get the email saying a cheat sheet, but no cheat sheet? Okay, it looks like everybody got the email saying that they're coming, but no cheat sheet. Okay. All right, so I will make sure that that gets out to everybody. I apologize that did not go out to everybody. I wanted to make sure we got that house cleaning done. I was going to do it. Well, I didn't run the 11 a.m. So I was going to try and do it earlier, but that sounds good. Okay. And some people didn't even get an email at all. Okay. Okay, so the one about goal setting, I'm glad it's got posted, but you're supposed to get these in your email, and it's not a big deal that we're getting the process down, but the idea is you'll get them emailed to you instead of just posted in Discord. We want people going to Discord, but we understand that sometimes stuff gets posted in Discord and people miss it. These are really important to be able to have. And so the one from Carlton about goal setting, you definitely want to get. A lot of what I've learned is about goal setting is from Carlton, and I think that's really, really helpful. And so I've made my own modifications, but you can do that. But you should expect the cheat sheets to show up in your email. That's the way they're going to be delivered for the most part. And then they might get posted as well, but they'll be delivered in your email for the most part. Sorry, I just work on the creation of them. I really work on the creation of them and then trust that they'll get out to people. I'm not good at handling the logistics on it, but I work on the creation of them. And all of us Inside Access presenters are creating them, which is really exciting. We're all making that a commitment for 2025 to be creating them. So you're getting, up to 4 a month. So Carlton's yearly goals are really good. If somebody wants to post a link to Carlton's yearly goals in the Discord, please do that right now. That would be great. Everybody should have access to it. But that's how I operate. I trust that everybody does their job, and most of the time it's right. But then we can always ask questions like this. So we've spent a lot of time talking about it. Let's dive into the market context as I pull the trading sim up. All right. What do we view the market context today as? And why is it? Why is that the market context? Yeah, John's right. High strength, low weakness because of CPI data, right? So yesterday we were talking about low strength, high weakness, right? That was sort of the market regime. That was the market regime that we were in, or the market environment, if we're using that term, which I really like using that term. That was the market environment that we were in yesterday, right? So what is one of the best things that can happen for us as intraday traders? What's one of the biggest opportunity sets we can walk into for intraday traders? A fast change in the market regime. So high strength, high weakness is a great thing, great environment for us to trade in, but fast changes are great, great, great for us. And never, ever forget that. And we're going to drill this every time in reading the tape, because again, the reason why we're drilling it in reading the tape is because Reading the tape is a skill. It's a discrete skill that we teach on the desk, and we hope that all of you will continue to learn and learn with us on. But reading the tape is a very discrete skill that you have to work to develop. But reading the tape is a skill, just like any other skill, that you have to understand when to use it. Because otherwise you can do the absolute right thing at completely the wrong time. Any questions about that? We talked about it yesterday, but we want to make sure that we're all in the right, thinking about the right things, okay? If you're trading the leveraged instrument, that's a great question. Oh, what a great question. I'll tell you about this at the end. We'll wrap with this. Let me save that for the end, okay? Let's get to C. Everybody should be seeing C right now. Is that correct? Everybody can see C. Awesome. Okay. Let's get to the chart. Okay, so we just talked about we had a fast change from high strength, high weakness, low strength to high strength, low weakness off of data, right? So the market environment shifted. And you can determine that really quickly by, let's take a look at SPY. How much of this move was retraced after the data came out? Was 50% of the move retraced. 584 to 591 was 50% of the move retraced. Was 75% of the move retraced? Was 100% of the move retraced? No, a very small amount of the move was retraced. So currently in this environment, we're thinking, okay, this changed already. Not necessarily because of the data is supportive of it, but because of the amount that was retraced. So coming in, we have this hypothesis that we're in a high strength, low weakness environment, right? And then you go to C. What's the setup? What's the opportunity in C today? I don't have the daily chart on. Beat earnings, yes. Significant beat on earnings, right? How much did they beat earnings by? It's a significant beat on earnings, right? So we categorize it as a significant beat on earnings with a all-time high break out of range. So it's a range break, an all-time high range break with a significant beat on earnings. Is that something that I want to short? Is that something I want to be short? No. The only reason to be short this at all would be if it turned into a failed range break and the market was showing weakness. Okay, so we've set the context. So if I tell you that, how good of an opportunity is this? Let's score the opportunity now, because that's the next step in this process. Market context, determine what the opportunity is, score the opportunity. And we're going to use numerical grades for the opportunity and numerical grades for the scoring of the trade themselves. I understand that we used to use numerical, but we're going to use alphabetical grading. I'm sorry, we're going to use alphabetical grading. So A+, A++, I think it's a solid A, right? I don't think it's an A+. I think an A+ would be the market breaking to all-time highs with it and all that stuff. But this is a solid A. Or it would be the market, there would have to be a market component to it as well. I understand that we're not a fan of its ATR, but that's something that we can wait and look at what the RVol is on the open. And if the RVol is significant, then we can play with it. Okay? Then we have room to play. If the RVol is not significant, then it lowers the grade, but that's a trade-based decision. That's not necessarily an opportunity-based decision. Okay? All right. This is how we're going to approach it. What are some trades that we could see right off the open that would make sense to us? First off, am I going to trade an all-time high break? Or am I going to trade, a pre-market high break here? No, because it retraced too much. It's not anywhere near that. Am I going to trade a down through open? Potentially. Am I going to trade a gap give and go? Potentially, right? Gap give and go is tougher though. I would score that as lower than a down through open. Down through open would be like a B unless it's huge volume. So it'd be an A opportunity with a B trade. This name doesn't typically have ridiculous momentum to it. So that's why it's an A opportunity with a B trade, right? It also has all this kind of overhead supply right here. So a down through open isn't great. A gap give and go. A gap, where could it give that would make sense? Where would the give be that makes sense at this point? This is all before the open. 76, but that's not much of a give at all, right? That's almost too low of a give. 75, then all of a sudden we're down below this area of buying. So that's almost too much of a give, right? So I would view that as like a B minus if you get a gap give and go, or borderline C. And this is all, again, before the open, right? So it wouldn't be as good. So I would almost pass on that B or C trade if you get a gap give and go and wait for like a fashionably late or something more clear like that, right? A Bella fade. Would I take a Bella fade here if they were just selling it too hard off the open? Nope. That would fall way below, that would fall below a C, right? Because that would be real selling at a spot where there really shouldn't be real selling. So if I get an opening range break, what would that be? An A. I agree. I think it's an A setup off of an opening range break as long as the opening range kind of holds that 76, right? So we've just broken down a bunch of different trades that could occur right off the open, and we've determined our scoring for each of those. We've also determined which ones we don't really want to pay attention to or care about. So all of that information allows us to just observe the price action as it's playing out, which we'll get into really quickly. And since Bella runs the meeting at 1:30, I'm not going to have time to do more than just kind of get us ahead to the break. But let's think about this from those perspectives, okay? So this is a big part of the skill in reading the tape, is where do I want to pay attention to? What are the spots that I want to pay the most attention to the tape on? And the reality is I'm probably actually not trading this right off the open because I don't have a lot that I can do right off the open. I want to pay attention to it into 76, but that's not a great trade. The real trade I'm looking for is an opening range break. So I need the range to get built out. Does that make sense to everybody how we've just broken this down into categorically approaching where our focus is? This is what traders do. This is what elite traders do. We have not put ourselves in a position to say, I don't know what's going to happen. I'll just wait and see. We're down into that 76. We can kind of watch the tape here, but I don't really have anything to do I? Opening range break occurs. Right there. Is that a trade that I'm going to take? 1, 2, 3 minute opening range break. Is that a great trade for me to take? Not really. Not really. Why? It's still within this whole context. So I want to see it shake out a little bit. If it was an opening range break at the highs, I might take a 3 minute opening range break or 4 minute opening range break, but I'm not going to take it right here. It's not a good enough trade for me yet. Make sense? If it goes without me, I can look for a 9 EMA continuation or something else, right? Okay. So we've just broken this down into what is the best opportunity? How do we step away from a trade that's not really doing what it should be doing and focus in on the one that's kind of a little bit better? How do we sidestep potential chop, right? Now we're into 77, and this is where I zone in on the tape. Man, the buyers just did not respect that 77 the way I thought they should. So even if I took that 3-minute opening range break, I'm like, I got to be real careful here. I would love it to come down to 76. Make sense? Then I'm thinking the range is 77 by 76. A real range would get built out, and that would be a really good trade. So now we're going to slow the tape down because instead of getting caught in this chop, I've now thought through the logical spot of this, and now I'm paying close attention to 76. Buyer stepped in, obviously. Might have to speed up the tape here, but if this failed 76, would I be doing anything? No, not really. Probably move on to other names. At this point, likely I'm actually filtering through other names, not even really paying attention to this one. If I plan for 2 names off the open, I'm probably looking at another name right now. I'll pay more attention to this if it starts to show some buying off the lows somewhere, and then the sellers can't step it back up. These may not feel like reading the tape lessons, but they very much are. They're basically telling us when to not pay attention because it's probably more just noise than anything else. Okay? Let's say I'm starting to pay attention to the tape a little bit more because it's down into a support-ish area. Yeah, this name needed patience today. And we talked about why it needs patience today. Because it wasn't that, it was a good opportunity. But we knew that we needed to be patient with it. Until something very distinctly changed. What we're looking for, what causes an opening range break? Let's talk about this as we're watching this setup. What causes an opening range break? Volume, that's something. What else? What really causes it? Exhaustion to one side. What really causes it? More buying pressure, but why? Nicholas, why would a buy program call it? Nicholas posted buy program question mark. Why would a buy program cause this? Cause a good opening range break. Just Nicholas. Nobody else post. Nicholas. Price insensitive buyers coming in. That's exactly right. There are large buyers that are going to be buying for a sustained period of time. And they're going to be buying in a way that shows that they want stock. So how is that going to show up on the bid? Nicholas, how is that going to show up on the bid? Correct. The bids are going to start holding higher. They're going to step in and just not drop. It is likely a TWAP order or some sort of order like that, but they're just going to keep stepping in. Now we can focus in on the bid. And when it looks like it might drop here at this 75, we can just watch. Are they stepping in? Have they been stepping in basically since like 76 kind of 30? Do we expect them to be most aggressive as they're starting their buying or ending their buying? We actually expect them to be most aggressive as they're ending their buying. When they're starting, a lot of times these buy programs will start trying to figure out, are the sellers going to step? Remember, a buy program is really just, we need to buy this amount of stock at this period of time. That's all a buy program is. So it starts by just not dropping. And then as it starts to lift, they recognize I'm not going to be able to buy it at the price.
Recording in progress.
How's it going, everyone? Just gonna get started here shortly. Cool. How's it going, everyone? Can you guys hear me? Just want to make sure. Awesome, cool. So another week where, I'd say that the biggest trades were once again on the news side. Some I'd say were clean, some were a little bit less so. I think that what we're kind of just like really seeing is that same kind of message as last week, that for the most part, much of the action is very much kind of intraday stuff. You have these like 1 day trends that can suddenly get reversed. If news comes out or something changes sentiment. Like just think about even today. You're having a very basically the exact same as last Friday, except a little bit earlier in the day. But you have strong momentum off open. Then there was the bearish Michigan inflation sentiment stuff, or inflation expectations, and then you had comments about reciprocal tariffs, and then that kind of knocked it down, but not really that aggressively. I think that what the market, in my opinion, is trying to say is that people are expecting kind of the same with just all political stuff for the most part in the more medium to long run, is that these tariff headlines are more so just noise, and that realistically the market is just absorbing and waiting for this to pass until there's some more clarity, and then we're going to go higher, right? We're gonna probably end up breaking this high. That's what it feels like. Earnings where I'd say fine. We can look at Amazon was small beat but fell back, just didn't do well enough. Meta held up nicely this week. Netflix kind of the same story. Palantir kind of like the new momentum leader, which we'll speak about shortly. But overall, right, it's there's nothing that really should change the narrative. But at the same point, there's no like super clear theme, right? And I'd say that from at least on my end, this week was definitely one of my lesser active weeks in terms of I think high grade setups. I think that last month there were a lot of good setups, but maybe they were not as like obvious as ones in last year. Last year, it'd be super obvious. There'd be a theme, there'd be a breakout, there'd be overextension. And not to say that can't come this year, but those were not the same opportunities. A lot of it was kind of more inference and game planning, and then there were still select good trades as well. But this week I felt there was kind of the first sign that things are very choppy, and the market really is lacking a theme. And I think that what allows one to really push size is typically when there is like a very clear-cut theme, and that's not the case. I mean, like you've had like nuclear and Palantir's maybe that like more speculative kind of like symbol style theme, but it's not been super clear cut. Now as far as kind of how I would go about trading, the next week plus, right? So there's going to be more talk about what like reciprocal tariffs there'll be next week, and I think that if a leader emerges, I think that there's a chance that once Nvidia reports, if they do well, and they have decent guidance, that can kind of put the the DeepSeek part of fears to bed, and maybe that can help reclaim, and maybe AI on the US side becomes this new theme. And that could be something. But I would expect kind of similar price action where dips are probably soaked. Intraday uptrends probably work well as long as kind of the status quo stays the same. You know, if Trump were to say that they're working with counterparts, that they're optimistic and stuff like that, then it's my expectation that that they're you'll see upside, and things should do well with potential sharp down moves in the middle. So I'll go through what I thought was kind of the best index trade this week, and then I can go through the best stock trade. Feel free to put in symbols. I can go with them as well. I don't have as much content on my end this week as others, just didn't trade as much in terms of either size or frequency, but definitely, you know, happy to go over stuff. So first, let's just start out with the market. So same as in prior week, we had this big down move, you know, over the weekend, and I'd say it was definitely more extreme than that of the prior week. You know, you essentially bottomed kind of near the futures open, this being Sunday night, and then right, and then kind of trickled back up, but you were in a way breaking the range. So in my eyes, it wasn't super obvious, you know, which you know direction you know we would go. But on this bar right here, Trump came out and said that, you know, he had a good talk with Mexico, and that they were going to do a 30-day pause on tariffs. So it's kind of the first sign that, you know, a lot of it is negotiating tactics, and that what's it called? And that could potentially be inferred for Canada and, you know, stuff like that, right? So given this, right, essentially buying calls on this bar versus the low. Can go back. Let's go Qs. I'm just gonna put in this. Let's see. It was. I'm gonna go 520. I'm gonna go. I'll change the date. And it was February 3rd, right? February 3rd. Wait, what was the day? It was Monday's date. I think it was the 3rd, right? What's the rule again? How do you put? I'm pretty sure it's. I did this last week. Hold on. 0302. Maybe different right show. Thought the rule was a period to get a patch chart, but we can just go over, I guess, today's option, and just pretend that, or just like the same management, just won't be the same price. But essentially, on the bar, buying calls, right? So if it was Friday's option, you'd be buying it around 380, risking the low of the option, so around 270, so around 30% risk. And I thought essentially taking off size right around here, once like momentum kind of clearly stalled, made the most sense. A few reasons why, in my eyes, this was not like some all-day trend to hold. One being that he was still expected to speak with Canada, which meant to me that what's it called? That he could come out and potentially negate it, but as well, there's a real risk that you kind of slowly fade back down as people don't want to be long, you know, into that. So you have this like momentum thrust, and then people are like, well, actually, I don't want to, you know, hold size into that. I was actually looking for this news trade in the end of the day because he was speaking at 3 p.m. with Trudeau, the Canadian Prime Minister, except it ended up being after the market closed. But I was definitely ready for some sort of trade into the close. But given how there was a huge gap down, right, that is a check in favor, right? You have people that are potentially offsides for a bullish headline, and you have something that potentially offers closure on the issue. So given that, it was definitely a strong trade. Now, what factors could have made this a better trade? Well, the first factor, right, would be if, let's say, this was 2-3 hours later, right? So like buying a 0DTE, right, in at 10.20, not as great of a risk reward, obviously, as buying that later in the day. And something that I was discussing was that if, let's say, this Canadian headline from that meeting came out later in the day, I would have been more likely to hit more real size purely just based on a risk reward. Because like, think about it, if you got a $2 or $3 move with like 20 minutes to go, like that trade like that we showed from the prior Thursday, that's going to pay out way more, right, than if, let's say, it was going to be with hours to go, right? So just something to consider with just like risk reward and stuff. But on that bar, that was the thesis. Now, going over to today's action, something that I think that we're starting to see is that people are, obviously on very high alert for these news trades, and the initial move seems to kind of be more of the move, and it is kind of meaning that we're not getting as much like follow through besides the initial bar. So, for example, on this bar, where was it? This bar here. I tried buying puts on this bar, right? I didn't get filled at first because it was way too fast and I couldn't raise my limit fast enough. But I ended up buying on this little bounce back up here because he was saying like reciprocal tariffs, and I felt okay, like maybe this is the big Friday trade. But buying puts after $3 down is a way risk reward. Then let's say if you go on Monday, right? I think that on that bar it was only like $1.50 or $2. So like it came out here, and you basically were able. Maybe I can pull up a 1 minute chart just to. This was a pure on $4 1 minute bar down. Maybe I'm wrong about this, but it felt as though Monday was definitely slower. Sorry. It's Friday, Thursday, Wednesday, Tuesday. Whereas the first bar here, you're looking at around $1.70 with some like sideways. To go $4, it took 5 minutes, right? So it seems as though people have either bumped up their algos, or there's way more people searching for news, which means that taking on these news trades could end up being a little bit of a worse and worse risk reward as days go along. So it's just something that I am, I'm thinking about for risk reward. It's the exact same way how like when you think about when the market is in a breakout or breakdown environment. Once everyone starts discussing it on Twitter, and it becomes the obvious trade, the risk reward gets a little bit worse. So overall, what I mean by saying that is that risk reward is going to matter more and more for me, and just kind of ensuring that I am really paying attention to a risk reward in a trade. So if this had fallen through and stayed heavy, that could have definitely been one of the best trades today. Ultimately, the only trade that I saw from today's action was I saw someone put in the chat Roblox, and that was a news trade. I was not on the desk for that, so I can't comment how it looked on the tape. Definitely see though a solid news idea. Buying puts, on the SEC headline, and then kind of just being against this size, looking for some sort of a trail or measured move. I don't think that, at least on my end, there were really any good price action trades today. From a 0DTE point of view, I thought that it was
You too, man. See ya.
kind of more just choppy action. The best trade of the week, at least on my end,
See you, bro. Enjoy your week.
if we go to Palantir, right? This is kind of more my style, textbook, just like technical analysis with like really good volume and such. So on Palantir, you had that big gap up on Tuesday, sideways action. Wednesday, kind of this inside day, and then Thursday breakout. So, you have really, really good volume, kind of this opening drive, and then it trickles off, closes weak, which tells me this is something that needs time to absorb, prove that that it's going to hold up. Wednesday is full sideways day. There's no real trend. The only way, in my eyes, that there'd be a trade is maybe some sort of like of a breakdown that holds under 100 or breaks the upper end. And then Thursday, really, really good volume. I mean, you could see it is consistently better volume breaking out, looking as though that it's going to break out of this trend, right? And one thing that I really liked about this trade, so the trade is going to be the breakout into the close. So think about what parts of this make it a really good trade, right? First, if we look at the daily, all-time highs, right? So there's no resistance. 2, earnings day high was 106.80. It perfectly went sideways over this for around 5 hours. Like, incredible sideways channel. Did a little bit of a dip, instantly reclaimed, and then broke the prior high on volume in the final hour. Something that I've said is that for me, breakouts in the first hour, breakouts in the last hour, those are both some of my favorite trades because that is when you typically see the most volume. So buying calls on this breakout, putting a stop under at 108. We went out to the 111 weekly calls. I think these were around 30 delta at the time. Look on. So bought the calls around $1.15-ish, right? The stop was around, I think it was like 85, so called maybe 25-30%, and then ended up holding into the close. I ended up selling like 2/3, and then I held some over just to see if it would gap. That part ended up being a dud, but the calls ended up almost doubling. I think it was like an 80% gain, and the risk was around 25 or 30%, so around a 3R. And what really served as solid confirmation was how the volume increased. So what I did was when it broke 108.69, which was the high, I bought calls, and then you can see on the low time frame, it really confirmed with good volume, and then I added more through 109 because the volume was assigned to me. Basically, you broke out, did a sideways, and then scaled the trade because the volume late was a great sign that I'm probably right on this trade, and that you should see that sort of a trend into the close. And one of the beauties of kind of the Palantir style stock, right, is that this is a name where as the range expands and as you get into the close, the implied volatility is probably going to increase and work in your favor, right? So as it's going kind of straight up, you're likely to see vol adjust, especially with incredible closing volume. And I think that's one of the reasons why you saw the option do so well. I mean, the option almost doubled, and the stock went $2.50, which is like a quarter or a third of an ATR. I mean, $2.50 move on Palantir really is not saying that much. I mean, think about like I don't know, maybe from 106, so from 11:20 a.m. back up to essentially the high was $2, right? just to like visualize why this did more. Palantir went from like 70 cents to $1.10. So in a similar time with the stock basically doing the exact same move, the option went up 50%, but into the close when the volume was really good, the option almost doubled. You know, those are signs to me as to why I like putting on option trades on those breakouts, because if I'm expecting the volume to increase and the range to expand, the market makers have to suddenly price what could this option do. And that is something that works in your favor for, you know, a weekly option trade. So for me, that was the most textbook trade, and you know, it's not been, you know, exactly, let's say, the best market environment for this style trade, but I still think that you know, spotting times in which you have a very clear volume characteristic and stock specific story, those are things that I think made this trade worthwhile. Also, Palantir is one of those names that people like to short, which means that it's kind of like your same style as Tesla, right? And in my eyes, this means that as you go higher and higher, clean breakouts are more likely to work because it's a combination of potentially longs buying it and shorts also closing it out. A name, let's say now like Nvidia, where everyone for the most part, or at least was before DeepSeek, was bullish on, breakouts are more likely to be crowded because everyone's bullish. But in names that are more controversial, think about even like nuclear names now, right? Like Oklo and stuff. Those are stuff where if you have like if there's not a clear consensus, price action and volume could be a really great sign because it's not a crowded trade. You know, I do think that Palantir could be, you know, one of the month's best trades if you have some sort of a blowout and turn. Unfortunately, this move into the close kind of ruins that potential, at least for the short term. But you know, this has the same volume profile of such of that of like a, you know, those Mag 7 names, your Teslas and Nvidias, and I can definitely see this be a really good trade if it sets up and truly blows out. Let's go through now questions. Where can you find more about the setups and trades? I mean, I don't, for like what I'm putting on specifically, I'm not like sharing it like live, so I think that maybe a better answer to your question would be, let's see. I know that there are various like sources on Twitter or traders on Twitter that discuss like momentum breakouts and breakdowns. So I would say that people that post content about overextension, mean reversals using options, or stock for that matter, or daily breakouts and breakdowns, overall just like momentum style trading using stops. That's kind of a not a vague way, but I think that's a fair description of the stuff that I do. SSR, I mean, I think that stocks on the SSR trade differently. Like they're more kind of like V moves, right? Like when things are going down, they're sometimes a little bit slower because they have to like work through bigger bids and stuff like that. Typically, if I'm trading something on SSR, I'm thinking about it more as like kind of a idea trade and stuff like that. But you know, or very quick like momentum spurts. If I think that, let's say, a big bid is in a break, I think that if you're thinking about like a large cap name, you know, something that's doing crazy volume and let's say doesn't have like it's not like one of those like $1 or $2 stocks where it's moving penny by penny. Like think about like Roblox, right? It has such crazy range and it's usually not trading in a 1 cent spread anyway that it's probably not going to be impacted as much and might be kind of a false nuance that really shouldn't be regarded. So typically SSR is something that I'll think about on a small cap, not as much on a large cap. Anything, frankly, within like the final hour or two, I am looking to, or I'm for the most part sizing to the full premium, just because there's such little time to the day that I just think that makes the most sense. Yeah. So just like a general rule of thumb. The only time where maybe you're not gonna do that is if you're like, okay, I'm gonna put on this like very quick scalp with where it's gonna be super tight. At that point, there's no need to risk the full amount, right? But like if you're thinking about some sort of like an idea breakout or breakdown trade, it probably makes sense to be thinking that way. Palantir, I definitely think, like I said, could be a the next big trade if it sets up properly. Tesla was a good breakdown. Unfortunately for me, just kind of mid-range on the daily. And yeah, I think 1 to 4 p.m. Is fair. I mean, I usually think about like if there's no exact answer, but like the morning session is between like 9:30 and 11. And the closing session is like 2:30 to 4. I mean, like most of what I would call end of day like momentum is typically in like the last hour or two to like 90 minutes, something like that. Or yeah, I'd say that Suzanne's answer is definitely spot on. Yeah, I thought Tesla had a chance of being a good breakdown on that 370 level. You had this kind of sideways like 373, but it did gap down, and I was thinking about taking a short under PM low, but it basically happened right at the open. So for me, I was looking for a little bit more sideways before it did that, unfortunately. I don't use any indicators. For me, like if you mean like technical analysis indicators, for me, everything for the most part is just volume, price levels, and bars stops. But there's no specific indicator besides that that's really involved in my trading. Yeah, so I'd say that so if I'm putting on a idea trade for momentum, once it gets close to the stop, sorry. Once it gets close to the stop, I typically like to trail, what's it called? On bars. So 5-minute bar is definitely a good tool, I'd say. I think that in any sort of like medium-term trend, that is definitely something that I think could work well for sure. Sometimes I'll use a 1 or a 2-minute. It really just depends on kind of what time frame I'm thinking. Almost all of my trades, I would say, are. I mean, I do some swing trading when like the market environment is good for that. But other than that, I'd say that what's it called? Other than that, I'd say my trading is very much intraday. I will rarely keep something for more than like one day overnight. That's just like my style, right? It's not necessarily right. For me, anything opening trade or opening drive wise would be what's it called? Would be very clear daily level where I think, or some sort of just a clear level in the recent time frame that feels rock solid. That if it breaks that, I don't need to see a consolidation. It's just worth putting on size. I could think about, for example, Nvidia last year through 500. When that broke 500, it didn't matter that it was in the first like 3 minutes. I needed to be involved on that level. So something like that. I always use limit orders. I never do a market. Like you never know if you get like caught trying to buy something when like liquidity sprays up. Using market orders on options is just a recipe to get really screwed, in my opinion. I've seen times during news where an option will look like it's trading by a dollar, $1.05, and it could suddenly spray to $1.30 by $3 because the market maker leaves. So just always use limits. Index options like SPY and Qs are interchangeable for me. The only index that I would ever do is SPX because they're pretty liquid. The other ones I find like NDX are not that liquid. And I'll just answer this one last question on how much time to expiry. Almost always for me, it's going to be whatever is the first expiration. So if there's weeklies, it'd be that week. If let's say it's a stock that is only monthly, then it would be whatever is that first month. Cool. Thanks, guys. And I hope that everyone has a great weekend. I'll talk to you next week. Bye.
Cause I have an appointment at 6. So I'll be from.
What up, Enrique?
What's up, man?
What are you doing here so late, man?
Working. What are you doing here so late?
Bro, I'm coming back from job number 2. I'm just trying to get familiar with Kite, so I thought like I'm not doing too much, so I'll stop by.
Oh yeah, I was gonna ask you, Garrett. That's what I was gonna ask you. I come. I want to say early, but I
I've been a little late.
No, I beat you. I beat you in a few times.
It's because I've gone instead of here. It's much better for my
just went based on that.
What's great is that
gonna start doing the same as you, waking up at 5:30 to hit the gym. It's true, man. Cause I just sitting down here for like 10 hours straight.